I'd like to welcome those of our colleagues that are just joining us. You're very welcome. We have coffee. Someone told me a while ago that he doesn't take coffee. So perhaps I should include that we have fresh juice squeezed and we'll be starting very shortly. So please avail yourself, feel free, and we'll start very shortly. Thank you. without much ado, we'll kick off this morning, and it's my great pleasure to invite for our open remarks, Mr. Adeleke Alex Adedipe. It would interest you to know that he's a managing partner of the firm, Douala Ovie Alex and Adedipe. He leads the banking and finance, telecommunications, media and technology practice. He is specialized and has depth of experience in telecoms. He advises regularly. He's advised on several landmark and award-winning transactions, both locally and internationally. He's been a delegate and guest speaker at various seminars, workshops, conferences, both nationally and internationally. And he leads the TMNT Finance Africa 2017 held in London, where he chaired a panel on enterprise cloud services and data center growth. This morning, it would interest us all. The topic for this year's luncheon is quite interesting. You would all agree with me that you would have come across in your practice at some point your clients, small, medium-sized enterprises, asking questions how they can access the capital market. So this morning's and our sessions today will be quite instructive. It will be a learning curve for some of us here that are new, and we'll be welcoming Mr. Adedipe right away. Thank you very much.
Good morning, everyone. Let me start by apologizing that we're starting a little late. And I think the most important thing that you are all still seated here and we are kicking off right away. Our distinguished keynote speaker, Mr. Temi Popola, other speakers and panelists, the president of the Nigerian Bar Association, trustees of the Capital Market Solicitors Association, all executive committee members of the CMSA present, men and women of the press, distinguished ladies and gentlemen. Good morning to you all. I'm indeed highly honored and humbled to deliver this opening address of the 2022 annual business luncheon of the CMSA. This year's event is our first physical luncheon post-COVID-19, and we are delighted to be back here. While I'm happy to welcome you all to the CMSA annual business luncheon, it gives me even greater pleasure to look at all seated present and those attending from different parts of the globe using our live stream. You are all welcome again. Since the setup of the CMSA in 2001, the platform has presented opportunities for solicitors in the capital market space to articulate topical issues and profile viable solutions. This year's theme, titled Capital Market Startup Financing and Syndicate Funding, Ability of Small and Medium-Sized Enterprises to Access the Capital Market, is in keeping with the founding ideology of the CMSA. As we all know, small and medium-sized enterprises are the backbone of major developed economies, as well as important contributors to employment, economic, and export growth. Nigeria is no exception. The most crucial aspect of SMEs in Nigeria is their contribution to employment. According to the NBS, SMEs in Nigeria have contributed about 48% of the national GDP in the last 5 years. With a total number of about 17.4 million, SMEs accounts for about 50% of industrial jobs and nearly 90% of the manufacturing sector in terms of the number of enterprises. Despite the importance of SMEs in the socio-economic sphere, most small businesses fail within few years, mostly due to lack of adequate funding. This luncheon presents a unique opportunity for capital market players to spearhead the conversation on unlocking the barriers that prevent small businesses from accessing the range of financial solutions available in the capital market. These solutions will enable them to raise the long-term funds required to spur growth and development of the sector, and in turn, ignite Nigeria's socio-economic development. I have no doubt that our impressive array of distinguished speakers would do justice to the theme. And once again, contrary to what many may think, the position that I hold as the chairman of the planning committee is merely a title. The work you see here today and what you'll be listening and what you'll be watching here today has been done by the entire planning committee members. They have been amazing and I thank them greatly. But for our sponsors, we will not be here. They have been generous in these hard times to make this happen. Thank you all. At this point, I say welcome. And without further ado, it's my honor to introduce Mr. Vincent Iweze, the moderator for today's event. Yeah.
Good morning, everyone. My name is Vincent Iweze, and please welcome, I want to welcome everyone to our event today. I'm sure if you go through the program on page 3, you'll see that we have an entire lineup today of very exciting conversations. But before we proceed, I'd like to call on Mr. Chike Obiaun, the chairman of the Cmsa and a partner with Templars, for introductory address and tributes. Thank you.
Thank you very much for that, Mr. Vice Chairman. Ladies and gentlemen, I'd like to say thanks again for the honor of joining us this morning for what I hope will be an exciting discussion regarding access to capital for SMEs in Nigeria. I'd like to thank our keynote speaker, Mr. Temi Pobola, and the panelists who are present here and the panelists who are yet to join us. I'd like to thank the audience for being in attendance today in such great numbers. I'd like to thank the planning committee for putting together what looks like a very well-planned program so far. And the executive of the Cmsa, which I lead, I thank you all for what you've done to make today what it is. Now, our theme today deals with how SMEs can access capital through the capital market. The chairman of the planning committee has made clear the importance of SMEs in an economy like Nigeria, and he also alluded to well-developed economies where we've seen SMEs form the backbone of economies. In terms of statistics, if you look online, you will see that in a place like Australia, they say 98% of the businesses in Australia are SMEs. 1/3 of the GDP of Australia is contributed by SMEs, and roughly 5 million people are employed by SMEs. If you go to the United States, you'll see that half of all jobs in the US are accounted for by SMEs. In Nigeria, I've heard the stats provided by the NBS, the National Bureau of Statistics. I have my doubts about the veracity of those numbers because, I mean, the informal economy in Nigeria, it is well known, is probably where all the bulk of our economy is. It's just that statistics is not one of our strong suits. Now, when you talk about SMEs in Nigeria, one of the challenges, the biggest challenges you will hear about will be access to capital. You will hear about infrastructure challenges. You hear about cost of doing business, which is also sort of tied to infrastructure. So how do we deal with that massive challenge of access to capital? And that's why the planning committee thought that the appropriate theme for today is how do we utilize the instrument of the capital market, which presumably provides cheaper capital than what you will find perhaps taking debts from the banking sector to finance the development and operation of SMEs in Nigeria. Now, we've seen a few examples of initiatives such as the Alternative Securities Exchange Market of the Nigerian Exchange Limited. We've also seen the Growth Board, and we've seen challenges around those initiatives. So I guess today we'll be looking to the erudite panel that we put together. And what a better way to start than to hear from the NGX themselves, what their experience has been with those initiatives, what the challenges have been, what we as capital market solicitors can do to assist in growing and developing those platforms, in creating products that would enable capital meet these businesses that are desperately in need of capital. I mean, I wouldn't want to go into the topic itself because, I mean, we have better people than myself to talk about it, but I look forward to a very exciting discussion today, an enlightening discussion. And hopefully also, I look forward to a situation where we go away from talking the talk to actually doing what we need to do in terms of actionable steps to make these recommendations that will come out of today's proceedings a reality. Now, in addition to introducing today's proceedings, I have regretfully the role to request that this body please stand with me for a minute in recognition of one of our dearest trustees who passed away recently, Chief Oludorotimi Williams. One second. May his soul rest in peace. Just a few words in honor of Chief Williams. Chief Williams was one of our dearest and most active trustees. He was an amiable gentleman, a seasoned investment banker, and a distinguished corporate lawyer. He was part of that group of pioneers of the Nigerian capital market who worked in merchant banks in those early days of the Nigerian capital market. So he wasn't just a lawyer, he was also an investment banker, and he cut his teeth in the investment bank known as First National Bank of Chicago Limited, Nigeria Limited, which was later renamed International Merchant Bank Nigeria Limited, or IMB. Members of the CMSA who attend our event will recall that Chief Williams was one of our most dependable, ever-present trustees. Only this morning, one of our older members walked into the room, and the first person she looked out for was Chief Williams, only to hear that he left us a few weeks ago. So today, I'm pleased that in February this year, we had the opportunity to say thank you to Chief Williams, along with other pioneer trustees of the CMSA, for the good work he has done, not just for this association, but for the industry of the capital markets in Nigeria, for the business of law in Nigeria. At that event in February, we went down memory lane, trying to recall the important role that lawyers played in creating and developing the Nigerian capital market. And Chief Williams was a repository of knowledge and history regarding those golden years of capital market legal practice in Nigeria. May he rest in peace, and we are ever so grateful for the role that he played in leading this organization and charting the path for us as capital market solicitors. And with that, I invite Mr. Iweze to continue the proceedings and perhaps lead us to the keynote speech, which we've long awaited for. I think also I should say that I've received apologies from the chairman of the Nigerian Bar Association, president, forgive me, of Nigerian Bar Association who couldn't be here today. And for that reason, we're skipping his speech and moving on, I think, to the keynote address by Mr. Mobola. Thank you very much.
Thank you very much, Chair. Would be craving Mr. Ben Obi Diego's indulgence to give a very short tribute in honor of late Chief Williams. Mr. Ben was our former chairman in Cmsa. He's also the partner for Hammond Partners. Thank you, Mr. Ben.
Good morning, everyone. Mr. Chairman, members of the ESCO and distinguished members of CMSA. I'm honored and indeed delighted to be given the opportunity to make some remarks or pay tribute to our fallen former member of the Board of Trustees, Chief Olurotimi Williams. I think our chairman has said most of the things about him. I've been a member of CMSA for over 15 years. And prior to my becoming a chairman, I would say I rose through the ranks. I was assistant secretary, vice chairman, and eventually I was a chairman until last year. Chief Rotimi Williams was consistently present, made himself available for CMSA for all our events. If I have difficulties in dealing with some issues when it comes to the trustees, he's one of the people I call on phone, and he gives me a listening ear, gives advice, and supported CMSA in everything. I can say without fear of contradiction that in terms of attendance, I would say that he's the trustee that attended most of our events, more than any other trustee. I would say that without fear of contradiction. What does that say of him? He loves CMSA. He gave his all to CMSA. I was indeed shocked when I read the message from our chairman about his passing. He was with us on 17th of February. And even then, they had personal photograph with him, shook hands. I never saw him again. Never knew that would be the last I will have the opportunity of seeing him. We pray to God that he will accept his soul in paradise. And for those he left behind, the fortitude to bear the loss. Thank you very much.
Our keynote speaker this morning is Mr. Temi Popola. And it's my pleasure to share with you his profile. He's a successful C-suite leader whose unique blend of business acumen, financial expertise, global market growth, performance, and operational insight has earned him a reputation built on veritable career achievements. A Wall Street trained investment banker, launched his career in London, working as an asset manager where he gained extensive experience researching and assessing publicly traded equity investment opportunities across Africa's energy sector. In his next professional role, he expanded his expertise as an equity derivatives trader with Bank of America Securities in New York. Beg your pardon. He expanded his expertise as equities derivatives trader with Bank of America Securities in New York. During this time, he fine-tuned his trading and investment advisory skills, working closely with both large corporate and private clients. After achieving great success on Wall Street, he turned to Nigeria and accepted a position with United Bank of Africa as head of structured products and investments for global markets. From there, he took over as head of sales, trading at CSL Stockbrokers. In both of these positions, he guided growth and advancement for investors across global markets, including South Africa, London, US, and Nigeria. leveraging in expert knowledge of the Nigerian Stock Exchange. He has quickly become recognized as a leader in the industry and was subsequently recruited in Renaissance Capital in 2015, where he rapidly progressed into the CEO role. During his 6 years tenure with Renaissance Capital, Mr. Popoola supported the continuous growth, profitability, and success of the organization by providing strategic market insights and leadership. He drove transformation of the organization by diversifying the company's revenue streams from traditional business lines to fixed income, derivatives, structured products, financing, and wealth management. In addition to influencing change across the organization, he was responsible for overseeing a global workforce, expanding foreign investor capital opportunity into the Nigerian market, and introducing new processes, programs, and strategy to exceed corporate and clients' expectations. He's distinguished by his passion for business, his focus on collaborative team building, his commitment to meeting organizational demands, and his expertise in finance, investment, and banking industry. He finds the greatest motivation leading and guiding others to perform above and beyond expectations and utilizing his influence. He strives to help organizations in exceeding short and long range objectives. He graduated with a first-class honors Bachelor of Science in Chemical Engineering from the University of Lagos, and he holds a Master's of Science from Massachusetts Institute of Technology. He's a CFA charter holder, and he obtained his NASAD Series 7 and 63 licensures. Ladies and gentlemen, let's welcome our keynote speaker with a round of applause. Thank you very much.
Good morning, distinguished ladies and gentlemen. Please permit me to stand on existing protocol. I thought that was a fairly long introduction. It was almost as long as the speech that I'm supposed to give. As I walked in, I've been torn in between giving a speech, which is what this is supposed to be, a keynote speech, or maybe speaking rather freely, you know, because of the topic at hand. It's a material topic that, you know, for all that we do at the exchange in my current capacity, we spend quite a bit of time on, but I'm also a little bit careful that I don't preempt what should be the sessions later on the fireside chat, perhaps, or the panel session. So I'd go into the speech, and I guess as we go, we'll see if I veer off a little bit, as my team asked me not to do. I should say again that it's a pleasure to be here. Let me start by congratulating the organizers, Mr. Obianwu, Mr. Alexa Didipe, everybody who's put this together. We have a long-standing, deep relationship, I would say, with the NBA and with the CMSA as a whole. Whenever I think about lawyers, I remember a sticker I always saw growing up on cars that I'm a lawyer, I like trouble, so stay away from me. I think that one of the things that your body helps us to do in our industry is really to avoid trouble. And the role that you play has evolved, I think, dramatically and materially for the industry. As the industry continues to deepen and to get, you know, more complicated, I think the industry from the legal standpoint also has evolved as well. So we're grateful for that. I'm supposed to speak, I've been told, for about 10, 15 minutes, so shouldn't be too long a topic. But by the time I'm done, I'm hoping that, of course, building on some of the people who had spoken before me, we would have a better appreciation for the importance of SMEs in the economy. We will have an understanding for what the current things I think that the capital market currently offers for SME funding. And then I'd look to speak to things that we continue to think through and innovate around on resolving this topic. In Nigeria, SMEs are critical components of the economy, and they are increasingly serving as the principal vehicle for the creation of employment and revenue through soft and entrepreneurial endeavor. MSMEs also offer the economy a steady supply of ideas, skills, and innovation, which are vital for promoting competition and efficient resource allocation. So in other words, if you think about what MSMEs do today, we've seen tremendous growth in MSMEs that actually start to give some of the bigger, more established companies a run for their money. This is how economies really grow and develop and ensure that you're able to leverage transfer of skills, ensure competition and innovation. Mr. Bianwu touched on this earlier, that according to the NBS, the MSMEs, at least almost 40 million of them in our country, Nigeria. And a further breakdown shows that of this 40 million, the micro enterprises make up about 95% of them. So really, the addressable market that we refer to here are those rather smaller ones, at least as far as our country is concerned today. The data suggests that they contribute about 48% of GDP in the last 5 years. And about 90% of the jobs in the manufacturing sector comes from this about 40 million or so companies. The challenges and recent interventions in Nigeria for SMEs, the reality is that the headwinds faced by many of these operators, some of them are fairly obvious, that everyone who does business in Nigeria will understand. But some of them also are somewhat unique to their ecosystem. For example, you've seen declining productivity rates for many of these MSMEs, and this is caused really by even things like just facilitation of trade, lack of infrastructure, the ability to price products properly, the multiplicity of taxes, levies, fees by several agencies of government, the lack of innovation, the lack of talent continues to plague this industry. The IFC estimates that about 131 million globally, 41% of formal MSMEs in developing countries have unmet financing needs of a whopping $5 trillion. So this subject of finance and capital for MSMEs is not unique to Nigeria. You'll find this to be a theme across developing and emerging economies. And this concern, of course, is shared by the Central Bank of Nigeria, which summarizes issues affecting the SMEs in the country to 4 broad challenges. If you speak to the central bank, one is the unfriendly business environment. So these are not my words, are the words of the exchange, just so that we are clear. The central bank says it's unfriendly business environment, poor funding, low managerial skills, and the lack of access to modern technology, with access to finance, of course, occupying a central position. Now, in spite of challenges faced by operators in the SME space, this segment of the continues to show rapid progress and innovation. It's important to mention that the African tech space has seen a significant increase in the funding of startups in recent years. There's parts of the tech ecosystem that qualifies as MSME. And looking at fintech funding activity throughout the years, the investor appetite for local fintech sector was clearly visible in 2021, with $800 million raised, which was 120% higher than fintech companies had raised in the prior 3 years combined. In the prior 3 years, it was $360 million. And of course, this signals rising excitement and bullishness in the prospect of fintech sector in the country. And subsequently, I'll speak to what the exchange is doing across many of these, across tech, across MSMEs, for example, and the more formal SME sectors. We've also witnessed, I think, from a positive standpoint, increased support from multilateral organizations and government agencies. So we're seeing increasingly capital flow through for many of these bilateral or multilateral agencies. You have seen, for example, the African Export-Import Bank, Cmsa, signed an agreement with the African Guarantee Fund for a $30 million re-guarantee facility to support African small and medium enterprises in December 2018. Of course, the Central Bank of Nigeria, in collaboration with the Bankers Committee, commenced the disbursement of 26 billion naira to MSMEs under the Agribusiness Small and Medium Enterprise Investment Scheme program. Of course, at the peak of COVID, the central bank also announced the 50 billion naira targeted credit facility for MSMEs and households. Let's talk now about some of the solutions to addressing these SME financing constraints. Of course, interventions will no doubt go a long way to address these key financing challenges for SMEs, but a lot more needs to be done. I often cite the fact that if you look at the Nigerian economy and the drivers of it, the truth is that government spending only drives about 10% of what really is the productive part of the economy. So there's only so much that the government or these multilateral agencies can do. So we need long-term solutions to address the critical concerns and technology challenges that innovative opportunities within the SME sector. According to the Global Partnership for Financial Inclusion, recent advances in technology are impacting how SMEs finance their business and transform their operations. So technology is increasingly becoming a key component of how we can solve this challenge. In 2020, for example, a report titled Promoting Digital and Innovative SME Financing showed that digital technologies are helping to close the financing gap for small and medium enterprises through the adoption of digital financial service solutions. According to the report, the main technology innovations helping SMEs can be divided into two broad categories. There's technology infrastructure, and there's enabling tools and channels. I'm glad to see that Mr. Tomiwa is here, who is very familiar with the technology ecosystem. And technology infrastructure refers to the tech pillars that new business products can be developed on. Of course, this is everything from blockchain technology to cloud computing, to the Internet of Things, amongst others. And on the other hand, the enabling tools and channels refer to tech innovations that businesses can leverage on for distribution channels for their digital financial products. In addition, these tools can be leveraged for the development of new business models and financial products, including AI, machine learning, big data analytics, amongst others. These solutions, when put together, create significant opportunities that SMEs are increasingly leveraging to address the funding gap. For example, by leveraging AI and big data analytics, a lender can leverage technology to analyze a borrower's risk by using an extensive array of data such as social media, call records, and the likes. And we're seeing a lot of this adoption by many companies within this financial services sector. Furthermore, the opportunities provided by technology include everything from equity crowdfunding platforms where investors can match with companies seeking capital. And at this point, I just want to also speak to what the exchange is looking to do in this regard. You know, when you look at the fact that as an exchange, parts of the challenge people tell you is the barriers to entry. An exchange, of course, is a lot more formalized, and the governance requirements and the barrier to entry are rather high. So as a business, we're asking ourselves, how can we start to reduce these barriers to entry? If you look at the technology ecosystem, for example, one of the things that gives us concern is that a lot of this capital raising that is happening here, I spoke about $800 million in 2021, none of that happened through the formal capital markets sort of structure. And so if you run a business like I do, you've got to be very nervous about the future of that if we're not seeing the traditional listings. At the same time, we're seeing all this capital being formed outside of our core ecosystem, and we're asking ourselves, what can we do to address this? So, for example, at the exchange, we are in relatively advanced levels of discussion with the regulator around a technology board. And for example, this, we hope, will be able to help us to pull in some of this capital being formed within tech outside the capital market. So, for example, in developing that board, we're saying to ourselves, that when we look at our rules and look at our platform today, it'd be very difficult for tech companies to list. We don't have, dual listing rules, for example. We don't allow you to raise foreign capital. Many of those deals happen in dollars, as you know, shareholder voting rights, amongst other things. So we are taking a step back to set up a dedicated board that we think can address these issues, make us competitive versus, other markets, and hopefully that way drive capital formation into the more formal part of the markets for technology. Of course, as you know, an increasing number of stock exchanges globally have set up specialized SME boards as well, or market segments with the intention of expanding SMEs financial access. Let me speak about the growth board very quickly. Mr. Obiang spoke about that when he spoke. Many of you will be familiar with the growth board that we have at the exchange. And this is a board that was set up by my predecessor before I joined. It's basically a board that was launched as a platform dedicated really for encouraging small cap and growth-oriented companies to leverage the capital market to raise long-term capital. The growth board targets fast growth companies such as SMEs operating in various sectors, including technology, and connects them with an extensive pool of investors. Through this board, companies in the early stages of development can take advantage of NGX's platform and diverse products and services to reach their goals. Entry segment for companies with a market cap from 50 million naira. So if you're an SME, MSME with what you think is a valuation, not necessarily revenues now, but a valuation of 50 million naira, you'd be welcome into this board, and it's capped at 500 million naira valuation. And this segmentation of the boards provides alternative options for interested investors to participate in their growth. Now, let me speak very quickly as to the challenges that we as an exchange have faced in scaling up this growth board, for example, because theoretically speaking, you can understand and get this idea that, okay, if you're an MSME, a smaller company, we're able to allow you easier access to the exchange. Why are we not seeing this scale up? Well, it's a few things. Part of it is what I call structural challenges with just the Nigerian capital market, sort of laws. So, for example, we're working with the regulator to amend some rules. When I speak with intermediaries, so I see Badebo here, for example, or you speak with any of our intermediaries and you ask, why don't you actually facilitate deals from the investment banking standpoint for these 50 million naira companies? Well, part of the challenge is that as per the rules, you can't charge more than a certain percentage on transactions. So if you're told that you can't charge more than, say, 2% on a deal, the incentive to go after a 50 million naira deal, for which you will then earn 1 million naira, if my math is correct, versus going after a 5 billion naira deal, I think is rather straightforward. Of course, we understand why rules like this are in place. It's to protect companies and to make sure that these investment bankers that like, a lot of their money, that potential issuers are protected. But in reality, we're seeing that today, if the advisors and the investment bankers and perhaps the lawyers as well don't find that to be a sector that they can make profits from, it will be ignored. And if you can't find the right advisors to advise you on how to tap capital, then you can see how that chain breaks down. So the exchange is trying to do quite some work with the regulator and key capital market operators and stakeholders to try to address some of these issues to make, a little bit more flexibility for that to happen. So that's one material issue. That precludes the level of investment in resource, in technology, in manpower into this sector by that side of the market. The other, of course, is what I call the level of just education and understanding of that space of options and opportunities that are available to them. So if I'm a small, medium-sized company, many people approach me, they've probably never really thought about listing before. All they know about is going to a bank to borrow money. This level of just gap in education, we're looking really to address. How are we doing this? The exchange is currently working on something that we call the Elite Program. And what we're looking to do there, it's almost sort of part incubator, part accelerator, where we're saying, can we identify a cluster of companies that we think have the potential to, in a few years, list on the exchange to tap formal markets for their capital financing needs. And then we support them with everything from our brand as an institution to, reducing the unit costs for what will be joint sort of shared services around tax, around legal, for example, expose them to best practices that will expose them to investors with the ultimate aim that they can end up on the exchange. So an idea like this, we're in very early stages of, crafting that, and is something that will be coming back to your community with thoughts around. So that's the other challenge that I see with many of these smaller companies coming to capital markets to raise capital. I think the third thing I'll speak on before I then bring this to a close is also the reality that increasingly the appetite of investors, the appetite of issuers is less formal. That's just the reality of the times that we live in. So if you look at everything that is upending the world today, it's talking about, removing intermediation. It's talking about decentralization. It's talking about less formalization. So for us as an exchange also, we're asking ourselves how we can fit into that. If investors say that they want a very quick route to market for an investable product, or if issuers also are saying that they want a very quick route to market, anyone who has been involved with the listing process in Nigeria knows how sometimes difficult it can be. So we're also, as a business, thinking through outside our formal business, how can we start to do business with corporates that have this sort of appetite in what they do. A final thing I'll speak to as to what we are doing is around innovation. Besides the fact that, the appetite tends to be less, as I said, formal, what you also see are digital assets that increasingly tends to be the language that investors are speaking today. So we're asking ourselves, in a world where everything goes digital, how do we ensure, one, of course, our long-term survival? But more importantly, how do we ensure that the exchange is able to participate? You would have seen that the SEC released a few rules recently along these lines, and we're looking across several sectors of the economy, thinking through how we can, through some of these initiatives, facilitate capital raises. So I think that in summary, the truth is that quite a lot has been invested into this subject of financing for SMEs. A lot more needs to be done, and a lot of that thing that needs to be done will be technology-led, will be technology in nature. A lot of the work that needs to be done will have to be done in collaboration with regulators, in collaboration with stakeholders, ultimately. I think finally what I want to leave you with is that, at the exchange, we have this thing we call the X Academy. It's a learning platform that we use to increasingly start to help small business companies start to expose them to best practices on corporate governance and things of that nature. Let me conclude by affirming the commitment of the exchange to building stronger collaborations with capital market solicitors. I want to restate our determination in providing businesses to access for long-term capital and to creating liquidity through our platform for an estimated pool of investor assets that is, runs into several tens of billions of dollars. And once again, let me congratulate the organizers of the event and to thank you very much for having me here today. Thank you.
I'll be inviting Mr. Chair for a picture and a remark. I'll also be inviting Mrs. Ayo Owoigbe, our former chairman and a partner at Banwani Godalo. Thank you very much.
I just wanted to say a few words in reaction to Mr. Pobola's presentation. A few things struck a chord for me. We've spoken about the importance of SMEs, initiatives that the NGX are looking at, and so on and so forth. But there are a few things, speaking on behalf of the Capital Market Solicitors Association, that were very striking. And one of them was the reference to fee caps imposed by regulators. I mean, it's a recurring theme for us as Capital Market Solicitors. And when we speak to the SEC, we try to explain, I'm trying to find polite words, but we try to explain how counterproductive those caps can be. When I spoke earlier, I challenged us to think about coming up with products that would enable us address the challenge that we speak about today. And if you drive away the interest of those experts that can come together to actually devise products that will attract capital to this much needed part of our economy, then that objective of protecting those businesses that seek and need capital then becomes defeated. So it's interesting to know that we have the support of the exchange in this fight for common sense. I heard the expression long-term survival, and it's good to know also that the exchange is thinking about a self-interested way, right? So help the market, but also think about how you survive in an environment where everything is becoming tech-driven. And finally, the concept of disintermediation. And I said to myself, provided that disintermediation means that people like Badebo are out of a job, but lawyers remain critical in these transactions, I'm happy to vote for disintermediation. So thank you very much for that very erudite speech, Temi. And I hand back to the moderator. Thank you.
So I have the indulgence of Mr. Kokwala to take another round of pictures with Chair and members of the Planning Committee and our Vice President, Vice Chair as well. Thank you very much. And the ESCO? Members of the ESCO. Okay, and the panel too. All right, thank you. Thank you very much, sir. Moving right along, we have a fireside chat this morning, and I'll be inviting Ms. Jumoke Olaniyo. She's the head business development division of the FMDQ. Is she around? She's also a non-executive director of the board of the FMDQ, the Private Market Limited. She holds a bachelor's degree in accounting from University of Jos, Nigeria, and is a certified treasury dealer. As a dealer and later a research capacity development consultant, for over 50 works on experience spanning across training, consulting, and banking with various organizations, including IBF Augusta Training Limited, now IBFCA Alliance Limited, FDHL Group, and Guarantee Trust Bank PLC. Ladies and gentlemen, with a round of applause, let's make welcome Ms. Jumoke Olaniyo. Thank you. I'd also be inviting over Mr. Tomiwa Aladekomo. He's a CEO of Big Cabal Media. They publish tech and youth publications, Tech Cabal and Zico, as you all know. Big Cabal is building the next generation of African media brands and creating some of the most exciting original content from the continent. Tech Cabal is a future-focused publication that leads clear and compelling conversation on the impacts of business of tech in Africa. He is an investor, an experienced executive, and he's worked extensively across media and marketing roles in Nigeria and North America. He holds a BSc in Business Administration from Boston University, an MSc in Anthropology in Columbia University, New York, and is a fellow of the Archbishop Tutu Leadership Fellowship and run by the African Leadership Institute. Without much ado, with a round of applause, please make welcome Mr. Aladekomo for the fireside chat. Thank you.
Gotcha. Okay. Good morning, everyone. I wonder if we should shift this to the side so we're actually facing one another. Let's move it. There we go. Morning. How are you?
I'm good.
Excellent. Thank you for joining us today, and thank you everyone for having us. I feel a little bit out of place here today. I'm not a lawyer. I'm not an investor or an investment banker, and I don't have a tie. But luckily, I didn't come in my usual work uniform. Otherwise, I would really have confused you all. It's really interesting topic, and in a lot of ways, one that is dear to my heart that we're speaking about today. Access to finance for SMEs. And as much as possible, I will try to make this not a dry academic conversation, but one that actually lives in the realities of our work on a daily basis and our experiences on a daily basis. So I'm going to start with just your broad experiences with trying to get capital to SMEs. You know, in terms of SMEs looking for capital, what are the challenges that you have seen on a practical day-to-day basis in actually getting them capital? Them accessing capital. That's the case maybe.
Thank you for that question. And I mean, it's a good place to start. And it's probably a topic that has been discussed quite extensively when it comes to talking about SMEs, funding, capital for them. There are always challenges, right? And a lot of times what we see is, permit me to term it, unrealistic expectations. That's the word I'm going to use.
Okay.
And I'll take a step back to explain to you why I use that term, unrealistic expectations. So these are, it's now MSMEs, right? We now have micro, we have small, we've got medium, no longer just the small, medium, and medium enterprises. So, and each of these entities are different scale for a reason. And each of these entities, therefore, at the scale of their business they are, have capacity at that same level. Now, if you step back and think about when any of these entities want to start up and raise funding to even start their business, research shows the default is friends and families, right? So why is it so easy to get funding from friends and families? It's because there's history. It's history with the individual most often, right? Okay. And in some cases, it may extend beyond friends and families because by word of mouth, someone who trusts someone has introduced you to the next person who can provide the capital or funding to you, to your business. If we take that principle or cardinal foundation of why it's very easy to fund from friends and family and bring it to the capital market, when you come to capital market as an SME and you want to raise funding, I don't know you.
Okay.
I don't know you. I don't know your business. So we need to start with creating the foundation of that trust, in quotes, and then, of course, reasonably being able to assess that you have a viable business proposition, or for anyone to be able to say in the capital market, okay, I'm comfortable to give this person funding to go and do the business they need to do. So with that background, when an SME or MSME comes to the capital market and wants to fund, the first step is we need to build that level of trust. And that level of trust comes from understanding the operations of a business, of the company or of the entity of the MSE. And it's as simple as just looking at what structures and processes have been put in place. And that's where the whole list of the challenges keep coming. Governance is an issue.
Okay.
Records of financials are an issue. Consistency is an issue. All of those questions that come around the challenges are just about trying to build trust and understanding that this entity that wants to take funds from the capital market is indeed true to what they say they're doing, and we can reasonably assess that. Because when you take the funds, they want the returns and they want the money back at the end of the day.
Okay.
So those are the typical challenges. I honestly don't think we should bore people with. It's the same things, the governance is not there. It's typically a one-man business and there's no segregation of duties. The finances, even with regards to accounts, you can't separate the personal account from the business account. Records of revenue inflows versus expenses. What is the plan? Where do you see yourself in? Let's not even go too far. 1 year, in some cases, you can't reasonably see it. Those are the kind of challenges that you would encounter as an MSME when you come to capital market to want to raise funds, because they are the foundations of how to build that cardinal trust that you need to raise the capital.
Okay, we're going to jump into some of the ways you're thinking about solving some of this.
Yeah.
But actually, you want to ask a question that sits in between solving it and these problems, which is as MSMEs, and I think it's been addressed earlier today, just their knowledge that they can access capital markets, the intentionality or the willingness to look at capital markets. Because I know when I speak with a lot of MSMEs, they don't even think about it as an option. Like that friends and family is one option.
Yeah.
If you're in tech today, I mean, there's sort of a pathway that's been created outside of the country.
Mm-hmm.
People follow that pathway. But when you think about going to a Nigerian bank to ask for a loan, or you think about going to the local capital markets for equity, it almost seems impossible. It seems like it's for a different kind of entity. You have to be, big enough to be publicly listed for it. So there's an education gap in there. Talk to us about sort of how that gets bridged, or what's the challenge there? Why is it that people don't see that as an option? Yeah.
I think I would absolutely agree with you that there is a gap there. And I think it's because traditionally, the way the capital markets have been structured, the MSME haven't typically been seen as part of that ecosystem. It's typically been seen outside, it's typically been seen informal, all right? But I think all of that is changing and all of that is evolving of recent time. And I mean, even from the keynote speaker's address, you can get a sense of that. The whole accelerator programs and sessions that are happening now, which probably didn't start with capital market focus intention, I think there's been a lot more buying into that. And I think you would see that a lot more of capital market related type entities are seeing the reason, I'll use the word backward integrate quite loosely, to backward integrate into that sector of the SME, seeing that that's one way to address the core challenges that have been experienced in that market space, in that sector. And that catapults them being able to quickly then come into the capital market space, having those issues already resolved. So clearly, yes, there's a gap in them knowing what is available. And when you have more capital market type entities organizing such accelerator type programs, then you can link it very quickly. So you start with addressing the challenges with all the governance structures and all the financing structures and all reporting structures and all of that. And then you show them the possibilities of, if you fix all of this, these are the alternative products available to you in the capital markets for you to be able to raise the capital you need. I think also, which speaks, to the last part of what you were saying, this middle bit, we are also beginning to see the capital market innovate a lot more. We've moved away from our very rigid and traditional capital market products. If it's not this way, it has to be in this structure, it has to be in this form. But there are a lot more initiatives going out there, bringing out new types of products, and especially on the structuring, where we're seeing or we're creating opportunities to solve the challenges that the SMEs have by using the principles we've learned in the capital market structure. Allow me to elaborate on that a little bit.
Please.
As a small or medium company, if I look at the financials, the performance, the history of a company, and regulation that sits as we speak today, just as the keynote speaker said, it would be very challenging for that entity to be able to raise capital from the market. But there's one thing that is consistent in that entity. It has revenue. It has assets, right? And most often, these entities are offering services to companies that are much larger than it and are more established in the ecosystem than it, right? So I can have some assurance that the larger corporate revenue and payment will come, right?
Fair.
So how about we use the capital market ecosystem, and fintech comes into play in such things, to securitize the receivables of that small SME. So we've created a secure way wherein we can create or turn the receivables of that small company into cash, because that's the kind of funding they need at that level. They're not looking for billions, but they need consistent working capital in a timely manner. Because if you look at research, that's one major factor for them that is also a problem. Payments is always a delayed payment is always a huge issue for them. So in cases where they've borrowed money to do that business and the payment is coming very late, they're running more interest, which is chopping into their, forgive my language, chopping, which is eating into their spread. And eventually there's nothing they're building. So a simple structure where we've taken capital market structure and securitization, as simple as the form is, where your local purchase order as an SME, your invoices as an SME, because we can get the ecosystem locked down to say the big corporate is going to validate that that payment is going to be made, means that you can turn around your process in very fast fashion. You can get the funding for that to deliver on that local purchase order. And in effect, we've given you capital and we've grown your business. So instead of being able to do only one purchase order on the money you got from friends and family in 1 month, you're able to fund 4, 5, 6, 7 because the ecosystem has been secured. So we're beginning to see a lot of that happening in capital markets. Structures or product types that were historically very traditional capital market products, tweaks to those types of structuring, the opening of the ecosystem, especially with the adoption of a lot of fintech, because it comes a lot into play where you're able to do validations, verifications, putting all of that together, and you can't just create channels wherein those kinds of entities can come into the market even much early. And that way you're on a journey with them. They may start out with this kind of product, they're building capacity, they're building balance sheet, they're building size and scale. And then they are moving, or they're able to move into the more traditional product where you have your bonds, your sukuk, participatory debt notes, which is another very interesting product for small and medium scale enterprises, because you always have this challenge of they don't want to dilute ownership, but they need capital. So participatory debt note is a fantastic product they can use in that light. And then eventually equities, because they've grown through the various stages from startup to medium scale, and then eventually what you call a large corporate.
Okay. In a second, you're going to tell me what participating debt loan is. Sorry, people. But I'm curious about some of this sort of securitizing, your POs. One, it seems there's risk. Definitely, there's some risk to think about. I hear you on the role of fintech or technology in those, because I know from experience, as a smaller business, just the processing time for capital, the processes, all of that can sometimes be part of the real key barriers to accessing it, because you're running a business.
Mm-hmm.
You want to keep running the business. You need finance, but you don't want the process of getting the finance to be so overwhelming that you can't run the business. And so it seems to me there's got to be a fair amount of simplifying the processing of this, simplifying the technology to access this where it becomes all online. Is that work being done? What's your sense on that space? Yeah.
So, absolutely, yes. And that's where technology gives you a huge advantage in such a space. What we would have had to do by legwork, or, you're doing on a system, the same way you could key in your BVN on an app today, and you get your your payment system linked, is such those kinds of advantages of technology is what I'm talking about. And yes, we are looking at that at FMDQ. It's one of the initiatives we're looking at under the FMDQ private markets. What it does is it also helps you significantly cut down the turnaround time. What would probably be the larger part of that whole process would be identifying the entity first of all and verifying the entity first of all. And after that, when you've come into the ecosystem in itself sort of validates each other. That's what happens, because remember, you have the big corporates as well in that ecosystem as well. So once you're boarded on that ecosystem, your ability to raise capital becomes pretty fast and pretty quick.
Fantastic.
Yeah.
What else is on the roadmap for?
Quite a bit. I mean, I talked about the capital market itself having to backward integrate. For example, from FMDQ, we've had the recent first of the kind, the Oxford FMDQ partnership with the Oxford University, Oxford Foundry and State Business University. And this is all about ecosystem where you're training the entities to address the challenges they've had, but also showing them the capital market side of things. Now, because we're in the capital market, we understand the capital markets. When we are able to talk to these businesses, we're able to position and show them what are the options for them. And as in the stage of your business, what is the best for you? Is debt the best for you right now? May not be. It may just be a case of you need working capital to be funded as efficiently as possible. You might be able to scale up a little bit later when you now need to start maybe expanding, business and scaling up, and then you need more long-term and more stable capital. Then you can be looking at your participatory debt notes, your typical traditional debt products, bonds, Sukuk, very interesting product recently, and a lot of people don't know about Sukuk, and eventually, of course, equities. So once the ecosystem of the capital market, and when I use the word the ecosystem of the capital market, I'm talking about not just the exchanges, not just the investment houses, but even the lawyers themselves are all coming together. We all agree that there's a challenge, and we all agree that whatever we put together needs to solve this thing to make it as seamless and easy as possible. It's brilliant how the product just sort of turns on. So those kinds of things are in place going on.
Fantastic. I think it's an interesting range of products. I'm going to assume that this is an educated audience, so I will come to you in private to talk to me about exactly what a sukuk is, unless the room feels they need an explanation. But I think there are a couple of elements that I do want to get into, which is, does government or the regulators come in here, especially as these sort of new products come into the marketplace? We touched on it a little bit. You answered from me, these are the products that we're developing for the market, but the consumer educating the SMEs on these products and the availability. So I'd like to talk about those two elements. So where does government come in? And then what are you doing to make sure that the people you want actually know that, oh yeah, we've built all these tools for you that didn't exist before, basically. So
let me start with what we're doing with regards to the people knowing. It will start slow. The idea will be, it will need to permeate, obviously. But I believe when you get into the ecosystem, I mean, my experience with the recent activation of our own accelerator program, which we call Scale, the getting into that ecosystem, the ecosystem seems to know itself. So all of a sudden, they're promoting what benefit they have gained from going in, from the first set of people who have entered the program, are telling others, that program was of major value to me. You want to get onto it as well, right? Okay. So we're of course leveraging or hoping that the ecosystem itself,
just word of mouth, people,
absolutely will take that up. But also because as an entity, we've also strategically taken that decision to focus on, I will use the word private capital, which is why there's an entity called private markets. And our job every day is to dream everything private markets, how raising capital in the private markets is challenging with all the risk inherent in it. We also are looking towards, a more expansive program of educating the market about how it is. Okay. That being said, we also have the FMDQ Academy, which we're going to be leveraging on to pursue that. Currently, the Academy offers programs free of charge to anyone who wants to listen. The programs that have there probably have not covered this topic, as we're saying, but like I said, it's an evolution that's just happening now. So yes, eventually the academy will also start putting out those kinds of courses, properly structured, properly tailored for the type of audience who would be, in such sessions and such classes, understanding each product type, understanding what capital raising tools you have, and how you can tap them. All of this, of course, will not be done in isolation without the capital market ecosystem. You have lawyers. We're here today because of that. We have the investment banking houses. I talk to them a lot, and we support them. They support us. We support them as well. I think, again, as I say, as an ecosystem in the capital market, this awakening that's this sector of the small and medium scale enterprises have not necessarily been well served, and the effort being put into it now, I think will result in quite significant benefits and advantages.
Fantastic. And then we're going to talk a little bit about government.
Okay, so it's government or regulators?
Regulators. I suppose, I mean, well, both actually. Where do they fit in separately?
Well, I guess government will come from general business environment, enabling business, which I don't know, to be honest. I'm not sure what to say about that. Power is always going to be a headache for anybody. Transportation these days, isn't it? Even to get to work now for the staff is a problem, even these days.
Once upon a time,
I guess
when they ask you what your problems are, you're like, finance, talent. These days, you're like, just everything. Like the country, macro. Yeah, it can be challenging.
So the macros, if you ask me, I'm going to say the macros may not just be capital market responsibilities, everybody's responsibility.
No,
as long as
just be on capital market.
As long as you are in Nigeria, it's your responsibility right now. That is. And I guess my idea would be then that for businesses, that kind of businesses, then everything else needs to be put in place so that it can sort of mitigate the disadvantages of what they're experiencing on the macros and the challenges with the business environment. Being able to get funding adequately, well priced, timely, sufficiently, that helps, with whatever challenges you're experiencing with regards to power, funding, and all of those kinds of things. With regards to the regulator, I think it will always be an advocacy issue on this sector and being able to get them to understand that we need to, adjust, we need to innovate is the word I'm going to use, because there's regulatory innovation as well, to be able to accommodate this sector. But I also think we on our side also, as when I say we, I'm talking about the capital market, when we advocate as well, we also need to balance it well, because the risk that they're seeing from their side, we need to be able to clearly show how those risks will be mitigated in the manner that we want to bring those products out. It cannot be that we say that regulation should be totally kicked out. It's there for a reason. But the advocacy, the time to take up the time to have those conversations, those meetings, those sessions, and work with them, take them along, carry them along on what is being proposed as the alternatives to be able to, bring these SMEs in. For them to even understand the SME ecosystem and how the business works as well. Those are the things that happen in advocacy and which we have to do, which we do, even from the capital market side of things. It would take time. I mean, we're talking of something that's been built over a period of years. I don't think anyone should think that switching is just going to be the switch of a bulb and that will be the end of it. It would take time, but I do think that there is progress being made because we're seeing a lot more of funding in capital market space for those types of entities. It may not have permeated to the last level yet of the micro type entities, but it's coming. It's definitely coming.
Fantastic. I think that's useful. One of the areas I wanted to talk about was syndicate funding, and just talk a little bit more about what that is, how it's working, and how it's changed over the last few years.
Hey, I'll be very honest to say I'm not very vast with syndicate funding, but the little I know is syndicate funding is wherein you're looking for more than one entity, more than one source to bring in the funding that you require as an entity. Now, syndicate funding in Nigeria has been there's not as much information about it. That's where I would say on it. So the challenges around it, I would say, would be with regards to what sector you're in, first of all, and the kind of proposition of the business you want to go into.
Okay.
And the syndicate being able to agree on the terms of how they're going to fund you. So with that, it's not a product that has been very prevalent in the capital market space for the small and medium scales. You hear about the syndicate transactions. You would hear about that very often.
So a bunch of banks come together. It's interesting. We also have it in the tech sector because, and at smaller scale, because people will syndicate a bunch of people raising $500,000, but they're syndicating that anyway.
Correct. So, but what you would hear about it more is crowdfunding than syndicate. That's what you hear a little bit.
I think
more.
angel investors syndicate and then
correct. So it's not yet something that I would say is very prevalent and very transparent for here in our market.
Okay.
And honestly, that's what I can say about it.
Okay. All right, fair enough. So not a big major area of concern for you at the moment. Or focus rather. Among the tools that you're working on. Fair enough.
Now.
Okay. All right, fair enough. Yeah. I want to ask a question that I'm sure many people in this room are interested in. Fees. We talked about fee caps a little bit earlier today. But a lot of this work is for smaller entities. And so how do you think about sort of the fees for this being for the work being worth it? And how does this scale up over time? How does this balance out for the very busy and, you know, successful people of this room?
I can only speak to what we do. A lot of what we do, you would see will be termed as market development. And so you would find that it is, permitting me to use the term sunk cost, but in the end,
this is investment. You're investing.
You have to invest if you want to build an ecosystem. It's like building a market. You're going to have to invest in technology. You're going to have to invest in capacity. You don't know what the volumes are going to be when the market opens, but you're going to have to invest in it. So a lot of what we do from our side is investment into building of that ecosystem. And the idea is, we've done the research that the initiative and the ecosystem you want to build is viable, and you get it right. You know, you build it right with right structures and controls put in place. What you're aiming for is the volumes eventually.
Gotcha. Okay.
Which should eventually compensate for the initial costs you've had to put into building that ecosystem.
Okay.
I mean,
that's interesting. So that's a transition, essentially. I mean, it becomes a matter of, we're not doing 3 big deals a year that are, you know, paying off the firm. It becomes a volume play over time because you do have to do a lot more of these.
I mean, I would, from my experience, absolutely, yes. My experience largely with the exchange has been from product and market development. Yeah. So building a market is not a one-day thing, and the cost to it is not a one-day thing. I mean, you can be working on it for over a year or 2.
What kind of timelines? I mean, so with some of the things that we've talked about in terms of developing a bunch of these products for MSMEs, what kind of timelines do you see to full implementation? How do you think about it?
I am wearing my project management hat now. You never disclose the timeline because, as you know how projects go.
You mean that I shouldn't, the people of Tech About should not hold you to timelines?
I never
for delivery?
I never can tell you project timeline until the day I'm actually launching because projects go as they. But what I can tell you is there's serious dedicated effort to put into it. I mean, if I talk about Oxford, we launched the FMDQ Oxford partnership in December last year. The first of the sessions started in March of this year. So from our perspective, we're not looking at, you know, letting them just run for long periods. We're trying to turn things around fast. We do understand the sector. There's massive need for it. There's massive potential for it as well. So yeah, we're working fast as we can.
Fantastic.
Thank you.
I think this is all really good. I'm quite keen to open up the conversation to the rest of the room. I don't know if we have a microphone that's going to go around. If people have questions or comments, actually, because I suspect that there's as much knowledge, or I mean, just by ratio, a lot more knowledge in there than even on the stage. Okay, so we have mics. Okay, so we've got mic. Anyone with questions, comments for our speaker? Okay, all right.
Hello. Right. Good afternoon, everybody. So my question or observation.
If you wouldn't mind introducing yourself before you
apologies.
jump into it.
Ubi Kene from Wigwe and Partners.
Okay.
Right. So my question is sort of in two folds. I will start with the introduction you made about the introductions into the capital markets for SMEs. How a major challenge is that they are not known. Right. I'm thinking, is there a platform, or is there a way we can get them to affiliate with known companies, for example, rather than take them on the merit of their existence using their books? They could probably get like a guarantor or a known player who you've worked with, who you've done business with, and then have the guarantor be liable for their, for any eventualities as it is. I don't know if there is a system in place like that, because I find that there are a lot of SMEs that will need these products, but because of their ratings or there's a limit to how much they can even access in the market. So if we could look into getting them to work with guarantors who can stand in their place and provide the necessary backing, it takes the work of the regulators, it takes the work of FMDQ to make sure that these guys pay back, because they have a guarantor that can do all of that. And then secondly, when it comes to letting people know about the market, sensitizing people. I don't know if you work with the commercial banks and how well you do that with the commercial banks, because a lot of people are aware of the commercial bank products. You talked about the FMDQ Academy. I don't know if there is a way you could partner with investment banks and commercial banks, particularly, to make sure your information about the FMDQ is made available to these individuals who need these facilities, because I feel like a lot of them do not know about your products or your existence in general. They'll rather go to Delaware or somewhere to raise capital outside. And while that would have its advantages, we have a huge market here that you can benefit from, but they are not aware. So my question or suggestion or observation is about partnering with investment banks and commercial banks for the purpose of sensitization, if there is something about that being done. Thank you.
Check it out.
Please.
Thank you very much for your question. So let me start with the first one, and let me share with you the way we dimension the trajectory of SMEs raising capital in the market from an FMD perspective. We have what we call the cradle. You're just starting out, you're small, business is still small. These are the type of entities most often working capital is what you need. And as I mentioned, obviously the size and scale of your business is not such that you can assess you on the merit of just the entity. So what you're looking more towards is the certainty of the revenue flow of the entity. So in that case, you don't have to go looking for ratings and all of those. We're only simply looking to put you into an ecosystem where we can be sure that your revenues, we can securitize your purchase orders, your invoices, and the likes. Then you have the guys we call promote or scale. Those entities have moved beyond startup early stage in that manner. Now, when I use the word startup, I use it very carefully, because you can start up and be starting up on level 3, not level 1. So when I use that, I'm talking of the smaller companies. But those guys in the middle stage of what we call promote or scale are the kinds of entities that you're referring to. Yes, wherein it can be a case of an entity that is already established in the capital market, raising a program or raising a fund and being able to then on-lend to the other entities. There's still benefit, because raising the fund in capital market to some large extent can still be cheaper for that entity. So yes, in that case, it is not necessarily the strength of the balance sheet of the entity of the SME that we're looking at. Rather, it is the strength of the entity that raised the fund in the capital market that is being assessed. And when they do it in a program, it makes it very easier for them to be able to then bring the SMEs under them. Using guarantees, very, very much an added benefit and something that's also become very popular in the Nigerian market. It gives a huge advantage to when you want to go and raise capital when there's guarantee, on it. Then you find that the investors are a lot more, amenable to investing in that security. So that's the middle ground. Then you have the third parties who can come to the market themselves and raise the funds themselves, be it promissory notes, the bonds or the sukuk, as the case may be. It may not be the large volumes in billions, it may be the smaller volumes, that they can raise. And these are the kinds of things that need to be written for the private markets area to say, or the SME market area to say, you don't have to be raising 1 billion as the minimum to raise the capital you need. For a bond, it can be smaller because that's what you need. You don't need to go beyond the capacity you need. Okay. So when we put any entity on that scale, on those 3 scales, so we also have 3 boards in the FMDQ private markets, it's about where do you fit? What does your capacity as an entity right now? What do you need, first of all, as an entity right now? And what does the capacity of your funding require you to do? So the answer to your question would be yes, you're very right in that manner. And we do have all of that at the FMDQ private markets. Thank you very much for your suggestion. I mean, you're absolutely right. There's a lot more we need to do with regards to education. There's a lot more we need to do with and getting that out and far wide and reach would definitely be good to partner with the the entities in the ecosystem, investment banks and the likes. We're working towards it. That's what I'm going to say.
Fantastic.
Thank you.
Sir.
Chief.
Thank you. My name is Dick Paul Jr., immediate past chairman of the Board of Trustees of Capital Markets Association. The activities of FMDQ seem to be shrouded in secrecy. And
wow.
Among big players, we just read in the newspapers, Dangote has raised so many billions, all these companies have raised so many billions. Are you permitting new entrants like the micro MSMEs? How do you want them to play in this market that seems to be for this elite group up there? And what's the role of the lawyer and all this? We are aware of the capital market. There are issues that protect us, but the FMDQ side, don't go there. For some select group.
Thank you very much, sir. Quite an interesting question indeed. I would be surprised, honestly, to say that it's shrouded in secrecy. When you see those announcements, those are actually bonds which are registered by the SEC or commercial papers which have been registered by FMDQ that are being announced. And this is done on a daily basis on all our platforms, social media platform, our websites as well. And you'll find them on our daily quotations list. I was going to say, I'm saying technical terms now.
No, I think
daily price list, published price list. So that is the crux of FMDQ's business. And I speak to FMDQ exchange itself. Now, the names there, perhaps those are the ones you sort of picked because they were big names. We've got several other entities that are not big names, especially in the commercial paper space, that are raising securities on a daily basis. And so that is even a fantastic case of how market has evolved, especially in the commercial paper side, wherein we started out with big names, but now we are able to offer it to other types of companies beyond just the big names. So no, it's not a secret club for any reason or any party at all. Now, that being said, every single security that is brought to the FMDQ for listing or quotation has a legal element to it. So there's a lawyer on every single one. And I mean, I'm sure the Capital Market Association and people here can tell you that every single one, because there's a lawyer to the issuer or there's a lawyer to the issue. And indeed, when we do whatever little due diligence we do, those lawyers have obligations. We need to see that they've done the proper checks on the documents for those securities that are, and they're actually, because those prospectuses, the pricing supplements, the program memorandum, and all of those things are checked to make sure that, they're properly packaged. So the legal sector is fully involved in every primary market transaction on the FMDQ. That's what I'm going to say.
Excellent. Okay. So after her, please.
Can we see the speaker, please? Thank you.
Okay, my name is Edele Kolorensho, and I have a question regarding FMDQ
From
from Bloomfield Law Practice. So I have a question concerning FMDQ Academy. So you listed out at the beginning of your speech, you listed out the problems that SMEs have, including corporate governance, and corporate governance is a big issue. When you talk about the board of an SME, I tell them you need to have an independent director, you need to have a director that knows about your business. People outside your family and friends, they think of how much do we pay them? How do we get them? So in your academy, I am assuming, please correct me if I'm wrong, I'm assuming that you teach SMEs about corporate governance, for example. So do you have like a transition so that when you finish teaching them what they need to know about running their business, you can now move them into, we can link you up, or you can come into this capital market space and provide funding for you guys? Thank you.
Thank you very much for that question. Let me start by first of all saying we do not have equities running yet on the FMDQ. I don't know if many people do know that yet. So the trainings on corporate governance, we do not have yet. However, the SME space is one that we've just started to work on from the private markets. Example is what I told you, we've just launched in December. And we have a program of events and things that we want to do to support that ecosystem. One of them is what I mentioned to be education for SMEs. So your question to the manner in which you've asked the question is with the assumption that we already have something running. We don't. But the idea would be that when we build the trainings and increase trainings for that ecosystem, we'll be doing all that, or be putting out all the types of programs that we believe will help ensure that they're able to tap the capital market effectively.
Fantastic. Thank you. Sir, no, she's adjusted. Okay. There's a lady at the back and a gentleman over there. So maybe we start with her. Oh, okay. We can start with her. That's fine.
Good afternoon. My name is Nimo Jamadibu. I'm a partner at Kenna Partners. I found the whole conversation very interesting. I think the last person that asked the question made a very valid point concerning corporate governance. But just two questions before I jump on that, or one question before I jump on that. When you said micro SMEs, how small is small? Just for context, I think just to give a figure that might help. But then, or what the parameters is in defining them. But then I think the other question was also going to ask concerning that is that, and maybe that's went from, when you're talking about corporate governance, the first thing that comes to people's mind is how it has been defined by the Nigerian Code of Corporate Governance, the number of directors and all that. And we clearly understand, as you said, these companies tend not to have the resources to actually accommodate that. So is it a system where you're speaking with the regulators and that at a point in time, they would have different rules? Again, the NCCG is not mandatory, but that they'd have different rules to comply with, because obviously that is what they're looking at as their benchmark, but they have the understanding that they can achieve that. So when you're speaking to people that are coming on board, do you use that as a benchmark, or do you have other benchmarks to use to determine what the corporate governance structure is, if it's sustainable, if they have the right sort, like what I say, structures in place that would ensure that this is actually a viable business people can invest in?
Thank you. Okay. So I think what I will start with is, I think there's also a change going on with regards to, or I foresee there will be a change going on with regards to what corporate governance will be, especially with regards to CAMA, that has given rise to new types of entities that can now be registered. That being said, with the new kinds of entities that have been registered, and I believe, my view is that supports a lot of the types of SMEs that would come out as well, the applicable level of corporate governance that those kinds of entities will need to have will evolve as well too. So when we speak to corporate governance for SME type entities, for capital market point of view, oh, sorry, let me go back first of all. The definition of what is micro, small, and medium is as defined by SMIDA. We don't go outside that definition. I mean, it's a standard, so there's no reason to go beyond or outside of that. That's the standard definition that you would use. And we've adopted that also even on the boards we've had. And even in the boards we've had, if you look at the boards we have cradle, growth, and mature, you would find that even the requirements for the entities that are under each of those are different, because we're acknowledging that those entities are different stages of development, different stages of maturity of the growth of even their corporate governance level. But that means that you still cannot go outside what is the legal and legislative structure in Nigeria. So they're still going to have to comply with what Kama says they must comply with at the minimum. All right. So that is the way the ecosystem has been created, and the rule guidelines, excuse me, have been created for such types of entities. But like I said, I think there will still be that evolution of how and what we hold those kinds of entities up to when it comes to with regards to corporate governance. All right. Now, with regards to educating and creating a system wherein they understand what they need to do and how to get there. On the accelerator programs that we have, it is part of their curriculum to speak to them about those kinds of things. From a global perspective, they get to hear about it, but from the Nigerian perspective, they also get to hear about it as well. Again, as I mentioned, this is early stages for us. We're still building, we're still evolving on what we're going to do.
Excellent. Unfortunately, it looks like we have to pull this to a close. I want to thank Jumoke Elanio for being with us today and for the thoughtful remarks. And thank you, everyone, for your time. I think she will be around, so maybe you can ask the other questions on a tea break or something. Thank you.
Right. I'll just crave your indulgence. We actually have a lot of our participants online, and we have quite a lot of questions.
So you have some of those.
Just one question. So she says, could you please talk a bit about Sukuk, just a little bit, and how we can benefit the SMEs?
About what?
Sukuk.
Excellent. I get my education anyway.
So Sukuk is a non-interest finance type product. The structuring of Sukuk type products is such that it says it's not interest, it's rental. So the sharing is on the product.
Okay.
Sukuk, the others I was going to call, but don't let me complicate matters. Other types of non-interest type products.
Okay.
They're project-based. They are tied to they're usually tied to a project or infrastructure development, as the like. So the cash flows for that for the payment on that instrument is tied to you building an infrastructure or delivering on a project, and then it pays itself. Okay. So I will give an example. The federal government Sukuk was used to do, there's some roads that we know that is being done. If you go on Ahmadu Bello Way, that was funded by the federal government Sukuk. The renovation of that road, the Ahmadu Bello Way, the Barbich Road, was done by the federal government Sukuk. You can see the signboard there. So they're tied specifically to projects. So in that manner, it's sort of ring fence the flows, the use of the funds, and the payments of the rentals back to the investors is all from the proceeds of that infrastructure itself, not from revenue from somewhere else. Okay. So it's becoming a very popular product, especially for project-based funding, infrastructure-based funding. And it is a product that can be used by other entities. We have seen Sukuk CPs in the market as I speak. We've seen commercial papers, sorry. Sukuk commercial papers. So as in it's becoming known, and I guess the way it is structured is useful for when you have project-based kinds of initiatives. I hope that helped.
You will have to see her after this.
In camera, then, yes.
And a lot
we'll
of
do
my
that.
colleagues will be happy.
Will
to
be with me
provide-
asking,
provide-
okay, all right.
May I crave indulgence? We'll just take pictures with, okay. We're pressed for time, but right, thank you very much.
Thank you very much.
I'll be inviting Mr. Chair and Chairman Planning Committee and the Vice Chair for a picture. Thank you. May I please invite Mrs. Oshoka? Thank you. Thank you very much. So moving right along, we're having a very short break for video messages, and right after we'll start with the panel sessions. Thank you.
discussions. So first person I'm introducing, she's a partner with the finance group of Templars. She has extensive knowledge advising on both domestic and cross-border finance transactions. She sits on the FNDQ OTC exchange, and she has a master's in banking and international finance law from the London School of Business. Run Zelda Akindele, please. Anywhere you're comfortable, Zelda. The next person I'm introducing is the Chief Executive of the Stanbic IBTC Capital. He currently sits on the Nigerian Stock Exchange Committee on Attracting Listings. He has an MBA from Chicago Booth. Round of applause for Mr. Funsho Akere, please. Anywhere you're comfortable, anywhere. Okay, the next person is an emerging markets seed stage capital. He's the MD of We Capital, has an MBA from Hall Business School in finance and strategy. Round of applause for Olu Onyisonya, please. And the last not the least, he has a PhD. He's the MD Investment Banking at United Capital PLC. He has an MBBS and MBA from the University of Lagos, the New York University, and the Hong Kong University of Science and Technology. Round of applause for Dr. Gbadebo Aderin, please. Thank you so much. So Zelda, if you don't mind, I will start with you. And I think just hoping if you can give some context to the topic we're having today. A lot of high words there, you know, SMEs, capital funding, syndicate funding, just to give some context to what we're discussing today. If you can. I can exchange seats with you if you don't mind.
Okay. Oh, this one's working now. Thank you. Yes, I think everyone in this room probably has a very, very good understanding of what we mean when we talk about the capital markets. We all understand already SMEs, MSMEs. So in terms of putting it in context, maybe what we're looking at really is what kind of financing are we talking about for MSMEs? And in understanding that financing and the cycle that they go through when they're looking for financing, fine, we can look at the CBN and the national policy definition, right, of these SMEs. And they tend to classify them with two criteria. It's asset base and also your employees. So I think with the CBN, if you have employees anywhere from, I think it's 2 to 200 or 20 to 200 or something, and an asset base between 5 and 500 million, right? And the national policy, again, is something similar in terms of defining them. Now, why that matters and why that's important is because obviously the kind of financing that those entities are looking for is completely different to what you have with a massive public company with over 1,000 employees, okay? But in terms of the financing cycle, because we're looking at things like startup financing, syndicate financing, right? And putting them in context, a lot of MSMEs, when they start up, they're looking for, sometimes it's something as basic as proof of concept funding. So they have an idea, but they need to bring that idea to market, or they need to prove that that idea is actually a viable business. So they need something very small. And that's what's often referred to as your friends and family financing, okay? And those numbers are really quite small, just to bring it to market. But then beyond that is actually what we call startup financing, but at that point, they've already actually started the business, right? And that startup financing is, okay, I have an idea, understand that it works, and now I actually really want to launch it into the market. But again, when you're talking about that have employees less than 200, including like land and buildings and things like that, then again, we're looking for very small amounts, right? So guys like Badigwa and Funshaw, that's not what I'm trying to finance at the moment. So the question then becomes, you have this all day. We're looking for small numbers to start up. We're looking for small numbers to from proof of concept to startup, to take me from startup to my growth phase, right? So how do I actually find base from which we should put this conversation in context is what kind of financing are these in for?
Thanks a lot, Zelda. I'm sorry, Olu, I'll share this with you, okay? For the type of financing to attract.
Okay, thank you very much. I think quick correction when you introduced me earlier. So I don't have a PhD, I'm just out there. But that was my former life, but I still, still there. But that explains that. Again, I've been doing this for a bit now. So your question was, what type of financing should an early stage company be looking at? And I think broadly, what you would say is in the early stages of a company, you want funding, long-term funding, and long-term funding that recognizes the type of risk or the stage of risk that company is at. A lot has been said earlier today. Part of that has been the fact that a lot of startups, there's a decent amount of failure in the startup space, right? But you need to put that into consideration when deciding the type of funding that should go in at the early stage of a company. And that really be equity from the founders, equity from friends and family, equity from third parties, right? And that risk level could also, that different pockets of funding that would also recognize the risk level. I think that's the point I just want to make here. And as a company grows, as you move from early stage to later stages, you get more mature, then you are able to access other pockets of funding, especially things like debt and the whole gamut between equity and debt. So there are a number of hybrids that you find between equity and debt, right? I think that's the broad. We can speak about this for a long while, but I think that's the broad guide in this regard. I think what's key, right, is in providing sponsors and promoters guidance around how to think about this. There is no one size fits all. This is a bit of a guidance around this. This is kind of like we'll say some guidance, and then for every situation, there are some deviations subject to sector, business model, and a number of other things. I'll hold it.
Thank you so much, valuable. So I think taking it from there, Olu, the room is a bit curious. When investing or providing startup capital, what usually be the criteria the firm like yours will be looking out for to decide whether or not to invest in this particular SME?
Yeah, thanks. First, you give me my first question to answer, or first problem to solve. You use startups and SMEs interchangeably, and in my practice, that's almost sacrilege, right? So I'll take it back a little. In our industry, which is venture capital, right? Startups and SMEs, especially by outsiders in the cocoon, are used interchangeably, right? And you could argue, right, if the business is just starting up, is a startup, right? They're similar, but there is a nomenclature to what they call a startup, right? Startups are very different from SMEs just in the built, the DNA of how the company tends to, right? And in the speed at which they grow. And that's usually because of the technology factor in there, right? When you insert technology into those things, it allows you to be able to acquire customers at lightning speed. As you know, with technology now, you can reach 1,000 people, you can sell to 1,000 people in 1 second, right? But if you were selling a physical product, you just cannot. And that's why I would separate it first and say, yes, we do fund startups. And what usually would differentiate, in our view, a startup from an SME is the amount of technology in their process. And so I'm going to speak a little bit more about startups, right? What we look for when we fund startups are a multitude of things. First of all, I would say that we are very, very comfortable with a high level of risk. And that's one reason why I don't think any startup that's earlier than maybe early growth should be even going to the capital markets for funding, because there's a disconnect between the amount of risk that you want the ordinary person to take, someone who's not a qualified or accredited investor, right? Or a sophisticated investor to take at that early stage. And that's why special purpose vehicles like venture capital funds are created. And that's why the nomenclature of the funding, the type of funding is very different. They're structured very differently. The downside protection is very different. And we basically swing for the fences. Basically, a lot of times when we invest in those companies, we are comfortable with losing that money. And this is not a risk that an ordinary person investing in capital markets is usually ready to take. So that being said, there are a few things we look at when we're funding these companies, and cash flow is not one of them, right? A lot of times you're thinking more from the market standpoint, right? What is the market opportunity? Who are the guys behind it? What's the team? Do they have product market fit? Right? And what is the growth potential? And this is why companies around the world got into big valuations, right? Without sometimes necessarily having revenues, right? I'll give you an example. A company like WhatsApp, right, was sold for over $13 billion in cash, and they didn't generate a single dollar of revenue. I'm sure all of us here use WhatsApp, but nobody has ever paid for it. But it's a valuable company. So when you take that kind of thing to the capital markets, except you're just going public, anything but risk equity would not be a good fit, because it's like the question we used to ask is, where's the revenue? How are we going to get paid? And so market projections, financial projections are usually based on opportunities that haven't materialized today. And that's why we do a lot less. My career is I started my career in credit risk, but we do a lot less in venture capital on financial projections, DCFs, free cash flow in venture capital than we do in just traditional finance. And that's why, again, I said, we're looking for how big can this get? You're looking at the team, you're looking at the market, you're looking at competition, how much has the competition raised, all those other things. So basically, you're having a mini market session on every company you're looking at. But as I said, again, most important things you're looking out for is the team. How big can this get? And what are the market dynamics?
Thanks a lot, Olu. Very insightful. I mean, like the idea behind the distinction between, SMEs and startup capitals. And thanks for the free lecture on that. So I want to take you from there to Funjo, because Olu had mentioned that his opinion was he didn't think startups should venture into the capital markets to raise money. So I have two questions for you. The first one is, do you agree with him? And the second one is, what do you think can be done by regulators and players in the industry to ensure participation by people, by SMEs in the capital markets itself.
Sorry, point of correction. I mean, early stage startups.
Okay. Point noted.
I think firstly, I have to give it to the CMSA. I mean, this is probably the best attended industry session I've seen in many years. I saw Eggy, who's on the board of Issuing House Association. So he's got to take a cue from this. I don't know if it's the lunch that you serve after or the breakfast that you serve before, the coffee, but there's a lot to emulate. Now, because this is a solicitors conference, I would disagree anyway. In my younger years, I wanted to be a lawyer. One of the first things you learn is just disagree. Don't start by agreeing. So, although I disagree, but on a serious note, I think we have to clarify that the capital markets includes private capital. So it's not. I think, Olu, you're talking about capital markets in the context of public markets, public equity, institutional investors. But within the capital markets, there's also a subset that allows you to raise risky private capital from private investors, right? So let's clarify that. The second thing is that MSMEs have to be startups to survive. I mean, in the past, we talked about MSMEs and, as companies, their steady growth, etc. But if you look at a country like Nigeria, and if you look at what actually your typical large companies are doing and how everyone's looking for market share. So if you're in financial services, you're trying to bank the unbanked. If you're in the consumer industry, you're trying to bring up mainstream brands. If an MSME doesn't think like a startup, the first thing is that they will not be able to attract private capital, because I would rather, if your pool of liquidity is limited to family and friends, then once you've exhausted that and burned through that, you have to go and raise money. And if you cannot approach institutional investors and you can only approach private capital, there are many competing investments that you and I can put our money in. I can invest in a startup, for example, in the fintech space. So why should I, give my capital to MSMEs if they're not thinking like startups? So I think there has to be an education that actually the competitive landscape is now intense and MSMEs have to compete for capital with startups. So they have to think about their what problem they're trying to solve, get leaning and in growth mode. The last question, and as a typical banker, I have lost my train of thought.
I can help
I've lost
you there.
sense of the question, but if you repeat the question again, it was.
I was saying, what can regulators do or players, in the capital market to increase participation of SMEs?
Okay, so I think creating a platform that allows capital market operators, lawyers, bankers, you could argue whether VCs and private equity, firms are private capital market operators, but allows them to connect providers of capital with those who require the capital. And FMDQ has talked about what they're doing, and I like that definition of credit, growth, and mature. So that's one step. The second is you have to be careful about overregulation, right? Somebody that's struggling to pay salaries for 10 people, 50 people, you can't impose a corporate governance requirement that then requires that they have a structure that's expensive. So we have to be mindful that regulators don't serve to de-risk, right? One thing they would do is with, for example, the FMDQ and the work and the certifications, They ensure that there's factual information that's provided on the platform, but they're not shifting that risk from the investor. So you have to be careful about how you think about regulation. Is it in terms of accurate disclosure, or is it in terms of providing safety? And you cannot provide that safety because the nature of the market is such that actually it's risky.
Thanks, Funsho. And it's interesting you had mentioned the issue about overregulation, and that takes me to Zelda. For SMEs in Nigeria today, is there any separate or distinct regulation for them? By this, I mean, so like Funsho had said, you're demanding for corporate governance, maybe asking for tax, pension. They come to you at the point where they are their lowest, and are saying, look, help me get this amount of money or help me raise capital. Are there regulations that understand the uniqueness of SMEs in Nigeria? And if there are none, what can be done to have that type of regulation for them?
Yeah, no, I mean, it's a good question because for many decades now, in Nigeria, I think SMEs have actually been, I think we've heard administration after administration talk about how if we're able to fund SMEs, if we're able to strengthen them, then that's giving, a good foundation to the economy of Nigeria, right? But do we have a specific legislation for SMEs? No, we don't have one singular framework. What we do have is we have pockets of regulation, right, from different sectors in different areas, which they seek to enable, protect, ease, right, some of the costs and burdens around being an SME in this economy. Now, the question that we should be asking is, how successful are these regulations when it comes to raising finance? Okay, so today we've heard a lot about how the exchange and FMDQ are taking into account SMEs. And if we look as far, for a while now, the exchange was actually looking at that. They had, many of you will remember what used to be called the Alternative Securities Exchange Market, right? Which was actually really intended for SMEs to access, again, the capital markets. That has since been replaced with the Growth Board since January 2020. And that again has its own, framework that comes with it, right? Things that you have to comply with. But I have to actually agree with Funsho. I don't always agree with the bankers, but I actually have to agree with him. Putting in place more framework, more regulation isn't actually necessarily the answer. It's not. Because like he was saying, for SMEs, you say to me, yes, I need corporate governance, but that means I need to hire a fancy CFO. I need to have both a legal and a separate compliance officer. Most of them can't afford that, right? So rather than the regulations looking at you SME have to look like this, right? And this, in many, many instances of a lot of regulation, is a mini version of a mature company. Rather, what we should be doing is looking at regulation which eases their access, right? Which makes it, simplifies the process, right? And the kind of things that we need to be doing is education, simplifying the process, support, okay? So if we look at other markets, for example, right? We look at the alternative investments market in the UK, extremely successful, right? And that was, again, created with the intention of targeting SMEs. And in fact, I think a couple of years ago, they actually had the designation of being specifically for SMEs across European legislation. The idea being that AIM in the UK would open up UK SMEs to the EU markets, okay? And they've been very successful with it. One of the things that they do with the AIM companies, which we've seen with the exchange rules a little bit, we've seen with some of the FMDQ private markets rules as well, is the idea of the nominated advisor, right? And this is something that I think is actually very key when we talk about what's in place for SMEs in terms of how they access capital. Like I said, it's not so much about putting in more rules, but it's about putting in rules that will assist them in what they need to do. So the role of the nominated advisor, it's a rule, it's a regulation under the AIM, right? And they have to have a nominated advisor, which it's usually like, an investment bank, issuing house type, right? And what they do is, even though they are selected by the company, they actually owe their duty to the exchange. And they're there to advise, handhold, oversee. But really what they are is an experienced hand that can guide that SME through accessing the markets.
Sure.
Okay. So rather than putting in place a lot of regulation, that's the kind of thing we need to be looking at. So like I mentioned, the Exchange Growth Board actually does have allowance for a designated advisor, right? And FMDQ has transaction sponsor as well. So what we should be looking at is boosting that role, right? And saying that this is something that is imperative for you as an SME trying to access the markets, trying to raise capital, right? And rather than having rules that, again, just want them to look like mini mature market. An SME cannot look like a mini version of a mature company.
Sure.
They just can't, right? And so that's not where the focus should be on regulation. The regulatory focus should be on support, access, education, right? And understanding, we've heard from Ola and Funshan and Gadibo in terms of what they can give, and there are different perspectives from VC and investment banking. So also that regulatory focus as well should be, it's not one cap fits all. So we're not going to access capital markets at the same level for SMEs and startups and mature companies. It's not possible, right? So we need to be looking at differentiating, understanding how we use the regulation to differentiate to the advantage of those SMEs.
Thanks a lot, Zelda. I mean, I like the way you've put it, that it can't be a mini version of a mature company. I think that's really is a defining line as to, how regulation can move forward. Olu, I'd like to move on to you and just ask very quickly, just to, move the conversation along. These days, the attraction for capital seems to be for tech companies. Usually that's, what people find, for lack of a better phrase, sexy these days. And I'm curious, what do you think companies in other sectors are not doing correctly, or what can they do to also attract the kind of financing tech companies are getting?
Yeah, it's a tricky question. And the reason why I say so is because I think the type of financing that goes into or that has gone into SMEs in the last probably 10 years has been a little different, right? Every type of investment that goes in has a responsibility on it. Some of them are looking for steady streams of income, right? Which is in terms of just interest income, low risk. Some are looking for high risk, high return. And I must first say that the amount of participation that I see from unsophisticated investors, right, even in the private markets, in startup land, as you call it, or tech, sometimes is worrying, because you almost want to ask, do you really understand the amount of risk you are about to take, right? We've been in a bull market for 10 years now. More sophisticated markets around the world, like in the US, they know how these things goes. As they say, right? Everybody's a good investor in a bull market. And so we're experiencing our first cycle. And what's happened is that everything has been going very well, and it's taking a lot of capital from traditional businesses that have solid cash flow. Everybody wants to be a startup investor, right? The next year and a half is going to teach a lot of people a lot of lessons, right? Because we're already starting to feel the valuation crunch from the US, right? Last week, the Feds hiked interest rates. So you're going to see a lot of people beginning to pull back. All the lazy money that was just going into startups. We always crack a joke, just create a deck and put fintech, metaverse, NFT on it, and they'll give you money, right? And so in the next year and a half, a lot of that's going to change. And learning from cycles is something that happens to mature an investment landscape or an ecosystem. And we're about to have our own first lesson. So yes, it's happened because we've been in a bull market. Tech has been booming. And because truthfully, outside companies like maybe InterSwitch over the last 20 years, we haven't really had tech companies. And so we're in our first wave, right? And a lot of these companies have done very well. Same thing with VCs. Almost everybody running a VC fund is doing well, right? Because the market is pushing us. And every year you're seeing double the amount. In 2017, when I moved back to Lagos, we had about 300 million come into the African tech ecosystem, right? Last year was over 4 billion. So you can see the kind of growth rate. And that growth rate, that extra liquidity that's coming round after round in these companies has made startup or tech investing the darling of the sophisticated and non-sophisticated investor. In fact, some PE funds are leaving what they're doing and starting to jump into tech. Everybody wants to invest in tech. So I think, yes, it's happened, but not for long anymore. We're about to learn our first set of lessons. And I personally just think that a diversified investment portfolio is still the best way to go. SMEs, traditional SMEs who sell fiscal products, have a solid cash flow base a lot of times, right? The way we build for tech companies is different from how you build for those things. From day one, you focus on unit economics, right? Are you going to have positive gross margins? Are you going to have positive EBITDA? You focus on those things, right? When you come to startup plan, that's not really what you're focusing on. But you're not trying to build a lemonade stand where you buy for $3 and sell for $5. You're profitable, but you're not big. So a lot of times they want to build the customer base before they start to monetize. So it takes a different type of investor, right? As we speak till today, as big as Uber is everywhere in the world, it's not a profitable company, right? The money that goes in is still less than the money that comes out. In traditional finance, it's not a good company, right? So we are about to learn our first set of lessons, and I think the market is going to balance out. And traditional SMEs will learn how to leverage tech without becoming a tech company, right? And startups would be able to market to investors in the right way, where investors know the level of risk they're taking. And so that's why I think regulation is good. It shouldn't be over-regulated, but I think they're going to have to step up. In the last 2 years, we've seen the crowdfunding reform, which was great, but it also still told that maybe a few of the people drafting it didn't really understand how some of these companies were working, but it's a good start, right? So I think, as I said, we're about to experience some correction.
Thanks. So, by the way, I saw you nodding your head, and if you don't mind, if you can share some of your thoughts on that question too, I'd appreciate that.
So thanks. I think I was in agreement with, I'm in agreement with Olu on a number of things. But let me just add something to perhaps what we have seen as well. So traditionally, it's taken for traditional, what I will use, I can use the same, that definition you gave for traditional companies, not only, right? We've seen companies grow and take maybe like 20 years or thereabouts to become very solid in terms of cash flows, not just because they've gone past revenue and EBITDA now, stable cash flows and all of that. And what has happened in recent times is with tech coming in, and not just fintech, but tech coming, any company that has that tech component, it allows you to very quickly, right? So it's shortening that time to get to that mature stage, right? So that explains a lot around why these startups are quickly growing, and then they're becoming darling because they get to that point very quickly. And I think I agree with your explanation around the way VCs see opportunities versus private equity and even other investors, the regular investors, right? This just makes it very clear that the risk level at the very early stage, right, is very, very different. But I could also turn around and also say that one of the questions you asked was, for those companies at the early stage, what do they need to do for the other SMEs, right? I think they need to, the ecosystem that advises, that interacts with companies, and that includes a lot of us here. As a finance person, we work a lot with lawyers. So finance or investment bankers or bankers will always work with lawyers. But we also know that the space is evolving. So if you look at financing from normal banking, it still exists, corporate banking, merchant banking. You see a lot of private banking, investment banking. You see a lot of private equity also coming in over the years. A lot of venture capital coming. All these types of funding are existing side by side, right? There's a need for all the parties, the ecosystem. I know Jumoke had mentioned a lot about our ecosystem. I agree with that. The ecosystem includes a lot of us and all the other players, even regulators, right? To recognize that there is the need to have an understanding of all these funding types available, right? To be able to position ourselves to guide these companies from startup stage till when they are mature, and recognizing the nuances, the differences between the traditional and the new tech-enhanced companies, right? Because those little differences, and we could go into a bit more detail, that they would influence the decision they make in how, on the side of those companies, how they access funding, on the side of the advisors, how they advise the promoters of those companies. I think it's just that integration. And I think this session is a very good platform for this discussion. And I think the regulators, FMDQ, NGX, have done quite a lot of things. I think there are a few other stakeholders that would, I reckon this discussion will serve as some form of conversation starters on all those other platforms. SEC, for example, is one of them. But again, like Funsho also mentioned, the market is not just only the public market, but the ecosystem needs to recognize this spectrum of financing, and that would do a whole lot in helping us evolve. As a market, we are also evolving. 10 years ago, 15 years ago, I remember when FMDQ, well, maybe not even FMDQ, FDHL then was doing a lot of training for fixed income. The market was just essentially a bank loan market. We had no CPs, we had no bonds. And you know, we've evolved, and I think we are evolving. And perhaps a lot is also happening globally as well, because if you notice, because markets are, money is fungible, and the world has gone global, even though, you know, a few things have happened recently, right? Technology has also allowed a lot of disruption, even on the financing space, but we just kind of need to recognize all these differences and then incorporate that in the way we engage with the businesses. I think I'll hold it there.
Hello. Thank you so much, Gbadebo. So there's a question I want to ask, and I want to ask all the panelists to give their thoughts on this. And Funsho, if you don't mind, I'll start with you. The structure these days, you know, when advising SMEs is to have an offshore entity where that investment is made, because the investors tend to feel comfortable that way. And my question is, what can we do to make Nigeria that investment hub where people feel comfortable to have investments here? I know that's a tall order to answer, but I would appreciate your thoughts on that.
I was going to ask if I parked in your parking spots, because all your jam questions. I think the short answer is, where's your capital coming from, and where are your investors? If the capital is coming from offshore and they're offshore investors, then they would always be more comfortable holding it in an offshore, investing in an offshore entity. It's difficult to compete with that. If your capital is coming from Nigeria, it doesn't make sense. It's not cost effective to then invest through an offshore entity. So just in terms of the simple answer, and I think the more complicated and perhaps more long-term is your legal system, right? You know, if you invested in an offshore entity, then you could seek the protections or the efficiencies in that legal system. If you did it locally, I mean, you all know, you know, the challenges that we have. Yeah. So I'll stop there.
I was going to please me next. Please. For sure, you started this by saying always disagree. I actually disagree with everything that Fanshawe said. Let me just put that out there now. But you still hire me, basically. No, but jokes apart, right? Obviously, as a lawyer, you're not surprised to hear that I disagree, and I'll tell you why. You are completely correct that this trend where we are seeing, and by the way, it started with all these tech companies where money was coming out of Silicon Valley. Silicon Valley was only comfortable with US entities. And so we started seeing this proliferation of Nigerian operating companies with Delaware holdcos. And it just started replicating itself to the point now where I get clients who don't even understand the reason for that structure, but are insisting on having Delaware holdcos, right? Now, I abhor that trend. And I'll tell you why, okay? The first thing is that it is not actually always optimum from a tax perspective and an operating perspective for a Nigerian entity earning its revenues in Nigeria to actually have a US incorporated holdco. It just isn't, right? It's not efficient, and every lawyer in this room will agree with me, okay? So how do we stop this trend, like you said, okay? And Fanshawe, I'll pretend you didn't just take a jab at our legal system, and I'll leave that one for now. The CMSA and other, legal associations, one of the things that we can do, because it's something that I try to do with my clients, I know many of my colleagues in this room try to do with our clients, but we are lone wolves, right? Is we need to start doing more advocacy around how you can take advantage of the Nigerian system, okay? And I'll tell you why. When we have to use these offshore entities, and like I said, very often now, more and more becoming US entities, what we see is that because the money is going into that offshore holdco, we're then having all our documents under New York law, etc. But guess what? They don't always have provisions that favor our Nigerian entrepreneurs. Okay, quite apart from tax, they have all kinds of other things as well that get caught out. So I'll tell you guys, there's this one regulation, right, in America for certain entities. Sorry if I'm going off course, but this is something that is actually very dear to my heart because it's such a sore point at the moment, and it's becoming a trend that we have to stem. Okay. There is a provision in a regulation in America for certain entities within a certain group, right? If you are a foreign shareholder, you cannot vote in that company. Many Nigerian entities don't know this, okay? And they think it's fine. I'll have my Delaware holdco. I'll be a shareholder there as well. All my fancy American investors will go into that company. But then somehow, if you get caught between that net, you are unable to vote in the holdco of your own entity. But these are things that they don't understand, right? And it's for us, the legal community, to educate and explain. So back to what can we do, okay? We need to do a lot of advocacy in educating the market about the implications of these structures, but also we need to strengthen our own legal provisions, our own contracts. Nothing stops us from the market, by the way, of having our own template. Absolutely nothing. Nigeria has become the tech capital of Africa. Nigeria has, 3 unicorns and counting. There is no reason why the Nigerian market cannot develop legal templates for investments. We see this in the US, we see it in the UK, we see it all over the place, okay? So that's the kind of thing we need to do. I'm going to stop now because we have other panelists. Like I said, it's a topic that's very close to my heart, so happy to engage anyone on it later. But no, we can't just accept it and let it carry on as a trend.
Thanks, Elda. So, Olubu, you agree?
Oh, look how I agree now because he's attracting the foreign capital. But
Lawyer now. I'm going to be a lawyer since I'm around lawyers. I vehemently disagree with Elda. I'll tell you many reasons why. And I do understand where you're coming from. It's a show of good nationalism. And right, let me take you back to probably 5 years ago, right? We didn't have a tech ecosystem today, right? And we had all the capital market that we have today. But what was the difference? They weren't investing in tech. What you have and what we want to lay claim to today as our unicorns were not built by us, right? I remember I was in a meeting with just background. So today our fund manages a little shy of $30 million. Our first fund was 4 million. I traveled to more countries than I should to raise that money. My peers who I left at Silicon Valley will go down to the streets. In fact, they didn't even need to leave California to raise that money. And guess what? There are a lot of billionaires in Nigeria, right? And so what happens at that time is that, except now where we have a few asset managers in our new fund, Nigerian asset managers, about 80% of the money we raised for the first fund that we used to invest in companies like Paystack, now TMAP, companies who are big, serving Nigerians in their hundreds of thousands, came from people who I didn't know from Adam, right? And he who pays the piper dictates the tune, right? Most of our local capital did not believe in us. And that's the truth. They were too risk averse. And so I remember there was a time when I was raising the first one, somebody said, come to Hong Kong and come and take a $150,000 check. Guess who was on the next flight? And there's so many $150,000 cars littered on the streets of Lagos. And people who could have that money and forget about it, because I was from banking. I knew how much was sitting at the average balances in people's accounts and companies' accounts. And it still happened because a lot of the times when a lot of this fintech started, they went to Nigerian banks. If you use products like Zelle in the US that does instant transfers, the company is 100% owned by a consortium of banks. Here you go to a Nigerian bank, they ask you, will you give me 80% of the ownership? How would you have 80% of the ownership? Can you bring 80% of the value add that that company needs to grow? We know the question. We know the answer to that question. And so until we start paying the piper, we are going to go to Silicon Valley. If they ask us to jump, we will jump. If they ask us to dance, we'll dance.
Wait, hang on. Please, Vincent, you have to indulge me. Just when he finishes, just 30 seconds.
Right?
To rebut.
So that's the first thing, right? I also believe, as I said, I believe in the nationalism bit of it, but I think we're not there yet. Right? This is how I think we're not there yet. A lot, not just Nigeria, right? So my fund today, we have investments in Nigeria, Kenya, Ghana, South Africa, Mauritius, Egypt, Zimbabwe, and we just exited company in Senegal. It's the same thing. The companies or the countries who are really strong at doing this kind of things are countries like Egypt. Even South Africa cannot. And it's because the government has played a very pivotal role in first creating the regulatory sandbox for people to work in, right? Kama, I look at Kama and it's the same thing it was when I did business law, maybe 10 years ago, right? It hasn't, I looked at the new crowdfunding regulations, right? In the US, you have the Jobs Act. This guys got together and said, let's jumpstart the startup ecosystem and created things that all the things that we write on today, people deliberately created them. Kama has ignored this thing that is creating these unicorns, right? And so there are provisions, there are things that usually happen with those kind of investors. When you look at it, in the crowdfunding rules, you can't raise more than $1 billion. That's $2 million. And this is when you are the third tier. The first tier says you can raise 100 million naira. To a company whose valuation is $50 million, that's payroll for 6 months, right? And he says, you see things like a company that has assets, physical assets of, it shows that they don't know, right? Because sometimes you can see a unicorn and all they have on their balance sheet is 50 laptops. That's it. And so that company cannot, under cannot raise 100 million. So there's a disconnect there. And so that's why I think we still have a long way to go. But as we get closer to that, we can then force our way into it a lot. But personally, I think we local investors need to invest here. Most of the profits of all these companies are still going back abroad. Same thing.
Your rebuttals, though.
Thank you. No, look, so it's not that I actually disagree with some of the points you're making, right? It's an adage as old as time. The investors will dictate some of these things. But where I'm coming from is not nationalism. It's more about how we actually strengthen and protect these SMEs and startups, right? There is a wealth of IP, human capital, expertise, call it what you want in Nigeria, right? And yes, it is true, the funding is not coming from within. But because the funding is not coming from within, doesn't mean that we shouldn't empower our entrepreneurs to understand what it is that they hold. After all, that money that you're talking about is looking for a home. Those international investors, they're not doing it out of charity, okay? So you want to invest in me, that's fine. But there's nothing that stops us from doing it within parameters that are going to protect the Nigerian SMEs, the Nigerian startups. The examples I was giving you earlier are real life examples that we have seen, right? All of these, in the next 3 to 5 years, we're going to have of them that have significant tax liabilities, significant, right? Which were not contemplated at the time that they were rushing to put these structures in because they wanted that Silicon Valley money you're talking about, okay? As legal advisors, that's where we stand, okay? We have to protect these SMEs and startups. And the reason we're doing it is not out of a sense of nationalism. No, we're doing it so that they can grow, so that they can get to the next level, so that they continue to access the funding that they need. But I agree with the other stuff you said.
So, Dr. Bedwell, what sort of word are you?
This is a tricky one, right? But I agree. It's a very tricky one. There's merit in a lot of things Olu has said. You can't argue with what is at the moment. There's a lot of things that Zelda has also said. And let me just start from Zelda's end. And I think that's probably where I tilt to, because I believe, and this is a theme that is running through a lot of things we're doing in finance. So for Africa by Africa, right? That's where we should be going to, right? That's the sustainable part, but we are not there yet. And we need to recognize that. And because we recognize that, we can't ignore where the funding is coming from. So we need to continue to do what we need to do to be able to access the funding while ensuring the infrastructure, the framework, essentially transfer the control of narrative from a financing to the local perspective, right? And I give I'm looking for a comparable, something to use within our Nigerian environment. Some years ago, I think our pension system was not as structured as what it is today, right? And a few governments ago, and I think it was Obasanjo's government, right? They did something that, till today we are getting the benefit of it in terms of the size of funding we have in that pension. So we still subpar, but still far better than what where we were before, right? I think our markets are evolving, and we need to also ensure that we are able to replicate such in this kind of in the venture capital space, in this sophisticated investor type of area. A few years ago as well, there were very few Nigerian PE firms. It was perhaps only African Capital Alliance, right? Now, today you have a lot more. Also, it was ACA and I think Ilios with some, but you have a lot more right now. You have the Veros, you have enough, without mentioning, there are a lot more Nigerian or African-based private equity firms, right? They still get funding from abroad, right? There's something about being domesticated, and they're also into the regulatory framework to allow them attract local funding. So I think we're in that, we're evolving, and this discussion is positive. We just need to continue doing that, having the destination in mind and fast tracking our move, our progress to that destination. I think that will be
Thanks. Just to follow up on that, there was something Olu had said, and I'd like you to respond to that, and everybody else too, that we are not there yet, and try to give an example of how we have capital sitting, not being invested for things it should be done, invested in. And my question is, how do we bridge that gap? How do we convince people in Nigeria who have the money to invest in things they may not understand, or they see this small boy, 50 laptops processes, say, a unicorn? How do we bridge that gap to ensure money meets or goes where it should?
Yes. Okay, I think that's a lot of the work we do. In the earlier session, there was the comments around, so the work we do is trust, right? It's really a trust game. A lot of platforms, from the institutions to the individual firms, right? How do you convince investors to say, this is where the opportunity is? There's a whole lot to that, right? It's like, so as an advisor, I'm speaking from insights from working as an investment banker, working with corporates and large institutions, in getting them to do some strategic, taking some strategic steps, right? Sometimes it's what they are thinking of. Sometimes it's not what they are thinking of. There's a whole lot to it, right? And if I just step back and reflect a bit and say, how do we go about this? There needs to be a lot of instead about education. So that education, or maybe stakeholder engagements across. There's some things that are probably beyond us as individual solicitors and financiers or investment bankers, right? But more from, so it's very important to have, well, I call it from a national perspective, or from a government support, there is need to have that top level view from the government, so to speak. And that doesn't say I'm just packing it to the government, because it's the people that make the whole, is how do we engage with them? Cmsa, NBA, veritable platforms to have those engagements. AIH, and I understand AD is here as well, as a body for issuing houses, and finance bodies are part of those, right? To create those credible environment for the parties that you're looking to convince to, to part with their funding, right? There's some things that need to move in sync. But in terms of individual firms engaging, if there's a project, for example, and I, for example, working as United Capital, and I have a client that I need to engage, I have something like that I'm working on, right? I identify all the different buckets of the parties to be engaged, right? And the real work is engaging them. You want to be able to access funding from a Nigerian investor. I want to use that as an example for a risky investment, or for a risky platform, or a supposed early stage platform. You need to be able to ensure that this party you're engaging has the appetite, has the capacity, has the willingness to be able to take on this kind of opportunity. There's a bit of education across, right? There are some parts where not have control over, but again, you need to now be able to identify, these are the areas where we don't have control over. These are the things we need to put together. These are the things that work in progress. We belong to XYZ groups who are making progress in XY in this direction. And but I must say that these kind of initiatives do not happen in a short while. They take a long while. A number of them, it take a long while. And you need to elicit the support of a number of stakeholders, right, in the space, from a regulator, either from regulatory or from those that some kind of influence before trying to, because it's local, so it's not like you're bringing anybody in. Maybe for that sector, right, you need to have some regulatory, because you need to give whoever is parting with money some comfort. Because remember, the person has to trust what you're putting on the table. You're not giving any guarantees. You need to be very upfront with that. And then There's so much there's so much detail in all of that. I hope I answered that. That was a very big, very vague and open-ended question, but I hope I
thanks,
gave a bit of
Funchal, can I just take your thoughts in 1 minute, please?
Yeah, maybe three things. One is that we've got to recognize that there are no shortcuts. I got an email a few days ago. I made a private investment, and the email said we're near bankruptcy, and today the company is bankrupt. So cash is gone. So there are no shortcuts. We've got to focus. There has to be a shift in focus. And if you look at the Nigeria situation, when we say MSMEs, right? This is the foundation on which actually the middle class evolved post when we had the first round of devaluations, because many families, one person was an entrepreneur. If you think about the Okeari markets, go to Alaba, you know, many of our parents, right, were involved in building up their businesses, positive unit economics and scaling up and building real businesses. So the whole era of quick money, I think the bear market, as Olu mentioned, will shake that out. And there has to be a real focus on, am I building a sustainable business, not trying to raise money at a higher valuation and you ultimately IPO to somebody or sell to someone. The second is you have to build your domestic investment pools of capital. And that addresses the tie we had. Because if you build your domestic pools of capital, those pools of capital will understand how not to lose their capital. And what you'll then find is that they're channeling money to the kind of startups or companies that we have in Nigeria that can actually succeed in Nigeria. And then the third is just recognizing that this is high risk at the end of the day. Even with all the discussions and the conversations, this is it's risky. You're putting money in high risk ventures. Recognize that sometimes you will lose your shirt, sometimes you make supernormal profit, and we shouldn't try to overregulate it. Thanks.
Look, I'm not going to say much more than, because I've already said a lot today, haven't I? I'm not going to say much more than to echo what the other panelists have said. And to clarify, I completely agree that in many ways, we're not there yet. We don't have enough of homegrown capital that is willing to invest in startups and SMEs. We just don't, right? So that is a part of the word of today, ecosystem. Okay, that's a part of the ecosystem that absolutely has to be strengthened, right? Before we then move on to these other pockets, but that does not negate the ability of these SMEs and startups to still access or attract funding locally. Like Funchal said, it's a very important thing where you have an investor who not only understands your market, but also understands the challenges that you face as an entrepreneur in that market, right? And it's something that you can't put a price on. And we see it as advisors every day. The questions that we get from international investors are completely different to the questions that we get from local investors. Sure. Okay, so I think there's a lot of work that needs to be done in terms of strengthening that local pool, right? Actually making it a viable option, But until the time when we do get there, we as a community, both the legal and the financial advisors, the intermediaries, the infrastructure, FMDQ, and the exchange have to make more of an effort to ensure that these startups and these SMEs can actually access what is there in terms of the capital markets.
Thanks, Elder. 1 minute, please. Your thoughts.
I think it's been a very interesting conversation because one thing that has been missing or that we can improve on is having people from more private types of equity, PVC, and more public types of equity talk and figure out where these things connect and where the overlap is. I think the one thing that we can really take away is that as we move forward, there's a general sentiment that these markets are different, right? That's why you see the guys who play in private equity or venture capital go to San Francisco, go to Tokyo, go to London, get their money, do their thing like us. And then the people who raise commercial papers and bonds from the market do their thing, and they just don't talk. I understand that currency fluctuation is one really big thing, because one market is dominated in Naira and one market is dominated in USD, and returns are done in that way. But I think one thing that can help both as private markets participants, public markets operators or players, and also the attorneys that work in that space, is a willingness to just be more open-minded and really learn about what the other side is doing, right? A lot of people in traditional finance just feel these guys are just running around talking valuations that don't make sense, right? And then they only listen when it's like another 150 million just came in. What are all these other people seeing? The whole world can be stupid, right? And so there's a communication or information gap that I think we can all feel by the private people asking, what are the public market people looking for in these companies? And the public market people really trying to demystify startup land, venture capital, and seeing where it links like all other markets.
Thank you so much, and thank you to all our panelists. We're going to have 4 questions. So please, if you want to ask a question, just raise your hand up and the mic will be brought to you.
Quite an interesting session, you'll agree with me. For now, I'm biased. We will start with our audience online. We have over 100 of them. We should clap for them for being patient with us. Thank you. So our first question here says, the Silicon Valley monies take over, I think it generally would give the startups they choose some edge over the ones they don't get to choose. So the ones they don't get to choose will find it difficult to compete with the ones they choose. That may in the long run create some artificial monopoly that might do only a few persons good. And I think that is part of what we should be in Nigeria.
So then, are you going to start with?
It's not a lawyer's question. I was actually joking. There was that question from a socialist. What that person has described as capitalism.
Yeah.
I don't think that actually, the idea that certain businesses will attract more capital than others cuts across whether we're talking about Silicon Valley money or local investors, right? Guarding against monopolies is quite separate. Luckily now we have a regime that addresses that, but I don't know that that is necessarily something that from an investment perspective, we are able to ward off. But, the investors at the table can add their voice.
Thank you, Zelda. I don't really feel that, or how do I explain it? I don't feel it's going to last for long. This exact reason is the reason why I started my firm, because you have to look a certain way, talk a certain way, have a visa in your passport to be able to raise Silicon Valley money. And as they say, right, brilliance is equally distributed around the world, but opportunity is not. And that's why you see the VC and the PE fund managers who are local, where maybe like 6 now who have raised just a decent amount of capital, right? We understand the local landscape. So what we've done is created a second level of interpretation. So we've gone to Silicon Valley, spoke all the big English, they've given it to us. And now we can look at a Nigerian company that is not building any Silicon Valley sexy thing, but we know that this is going to make money and we can invest in them. And so what we can do basically is, truthfully, is Silicon Valley also gets comfortable when there's local capital in there. They get comfortable because they say, that means this guys, there's something they're seeing that we don't see. And so even if it's 30-70, if we both work together to fund that layer of capital that then deploys to our local industries, I think we won't have a problem.
Okay, any questions in the room, please?
Good afternoon. My name is Awele Kenway. I'm an associate at Strachan Partners. Zelda, I just have a question for you. I was just going to say, given your disinclination towards the Delaware holding company, I just wanted to get your thoughts on the Nigerian startup bill, and if you think that it would make any difference, sort of, particularly given Section 39, which says, which speaks to the helping by the council towards the listing of a startup on the Nigerian Exchange Limited.
Thank you. Thank you. I think I need to clarify again for the second time. I am not anti-Delaware holdcos. What I'm saying is that it is a structure that is being replicated as a trend, sometimes where it is not necessary, sometimes with startups and entrepreneurs who don't actually understand the implications of that structure, and sometimes where it is going to have the effect of huge tax liabilities, not to mention the other come with US regulation. Okay, so just to be clear, I am not anti that, but I think that it is something that we need to be very deliberate about when we're structuring, these things. Now, having said that, it is a recent trend. We do have many local-based entities that do not have Delaware holdcos, right? That are doing well, startups, SME stage, etc. So I'm not saying that we have to get rid of that, and I'm not saying that we don't have the platform here to do it. I'm not sure if that answers your question. Okay.
Okay, next question, please.
All right. Protocols observed. Abidemi Akinloye, partner, Pentagon Partners. Here, knowing that we've created a pathway for SMEs to actually have access to funds in the capital market, I'm a bit concerned about distinguishing between startups and SMEs, especially on the basis of tech. We all know tech is evolving, and the only reason why certain companies have access to funds, I won't use capital market, is because the tech they utilize allows them to scale up rather fast. So if you use tech to actually separate SMEs into startups, and I don't know what you want for SMEs, SME startups, that means you're isolating certain companies' access to capital in order to scale up from having access to funds. So I will use, for instance, solar companies in Nigeria right now, energy companies, and everyone seated here know their great need for funds. The only difference is they don't utilize tech right now. Perhaps they've not discovered it. Perhaps we should go to the tech company and say, okay, create a product for these guys so that they can approach people like Olu and they won't get funds from Silicon Valley, but perhaps there are other investors offshore that would have interest in these companies. So what I would like the panel to address is, can we actually define, and are there metrics we can define for use tech that financial companies, Stanbic IBTC, comfortable ways to take to investors that can actually get them access to funds?
Well, for sure, I guess we'll start with you.
Yeah, it's probably not worth spending time talking about, distinguishing the two, right? The real question is how do you access financing? I think you've got to fix the demand side, you've got to fix the supply side. To fix the supply side, the platforms like the FMDQ private market, NSC Growth Board, right, are platforms that, and it's not something that will happen overnight, right? If you were investing in crypto, if you invested in, companies that give you outsized returns, it will take a while before you decide to invest in companies that will give you gradual returns over time. You need to have lost your shirts or many shirts, dresses, etc., before you come back to earth. So those platforms are doing the work in terms of fixing the supply side. How do you organize private capital? How do we get people in this room comfortable that there's a platform where they can go and view available investment opportunities in SMEs, right? And I'll use the definition of SMEs. Some of those SMEs, their growth will be accelerated by tech. Some of them, their growth will be accelerated just by, well, actually, I think all businesses will be accelerated by tech. Yeah, so you fix the supply side, start to attract private pools of capital. Hopefully, Olu can, start up a Naira fund that's dedicated to funding, people like, businesses, fund distributors. I would invest actually. If you were funding people in Okeari, distributor in Okeari sits on billions. Why can't we use tech to actually ramp up that business such that you can sell that business to one of the leading retail companies in Nigeria? So, they can talk after. Then you fix the supply side, then you've got to fix the demand side. How do companies, SMEs, get themselves ready for capital? And it's in their accounting. It's in, there has to be actually, you almost have to have a support structure, right? That, can assist, accounting services, legal services, banking services, all packaged that can assist an SME. Then the SME needs to realize that this is serious business. This is not, only the best will attract capital. And you start from the best, and people then realize that I need to get myself to a position where I can communicate my positive economics, I can communicate my expansion plans, I'm building a track record, and it's not a one-year journey. It's I have to build myself up until I'm attractive for the supply side. That's probably how I would look at kind of solving the problem.
Thanks, Muncho. I think we'll take one last question. Okay, the gentleman over there.
Hello, good afternoon. My name is Tommy Oladeji of Odujiri and Adifulu. My question is for either Olu or Funsho. So I'm I have a nationalistic sense. So looking at the AFCFTA with particular reference to African SMEs now. So my question is, so other than going to Delaware, other than going, okay, I'm not anti-Delaware. So other than going to Delaware, are doors in Nigeria for VC, for PE, even our exchange, are doors open to particularly now for African SMEs to take advantage of? Lately, I've heard of companies, African companies also looking to expand. So in Nigeria, how are we setting up ourselves to allow African SMEs to come in, and even Nigerian SMEs to expand within the shores of Africa, within Africa rather? Thank you.
Thanks. Let me start with you, then Funsho.
It's a very good question, and I think it's timely. First, I would just talk briefly about how Ps and VCs have just funded African business even before now, even businesses that are not necessarily tech, right? You look at companies like Real Fruits, Wilson's Lemonade, iFitness, the gym, some laundromat chains, to supermarket chains that are known names today. A lot of those companies were funded by local PE funds, like the Verods, the Coramos, the Cardinal Stones. They were. So private capital has been in the business of funding viable businesses. Do we need to expand the pool? Yes. The second thing you've spoken about really is around just African businesses, right? One thing we're excited about is the app, right, which has a lot of provisions that can to create a much bigger African market, right, where you can sell in different places, not just your products, not just digital product, you can also sell your skills, right? And what happens is that it opens the market up from maybe a 200 million person market to a 700 million person market, right? Barring just some language barriers here and there. So I think we have strong hope with Africa. But again, as referring to just Delaware, it's not just Nigeria. Israeli ecosystem Brazilian ecosystem. Actually, yesterday I was on a panel with people from most emerging markets, right? Turkey, Brazil, Mexico, Ecuador, and it's the same thing. Delaware made it very easy for everyone to go to. And this is what you enjoy as a country. If you're forward thinking, people are going to come. Even in Africa, Mauritius did the same thing, right? And then there are a lot of people there. Rwanda is doing the same thing now, right? And so it's if you do the work, people will come, right? And I think that's how we need to think now. How do we help our country to do the work so that what we have will stay and it will open Africa as a market and as a hub and people want to come here? At least, first of all, you have to have lights. So we can start with that.
I want to share your thoughts, please.
Maybe to add quickly, I think it's a real risk for Nigerian SMEs with AFTA, and there's a risk that the market opportunity will be grabbed by other African countries, or the risk that these people will move their business to other countries, manufacture there, get labor, and then supply into Nigeria. So I think we have to deal with things like taxation. Taxation, creating the enabling business environment, and the cost of doing business. Because you have to have a competitive advantage doing business in Nigeria. If you follow what AFTA seeks to do, is to level the playing field at the market. So the markets that have a competitive TJI in terms of cost or ease of doing business or attracting capital are the markets that will seize the opportunity. Yeah.
Well, thank you so much. Can we have a round of applause for our panelists, please? I'm sure that has been a very engaging session. Thank you, Shaw. Thank you, Olu. Thank you, Badipo. We'll just have pictures quickly. Chair, Leke, please, if you can come forward. Thank you so much, everyone.
We'll be inviting Mr. Ben to make presentations to our speakers. I understand there's still a picture session ongoing with our panelists, and members of ESCO should please join them. As speakers, panelists, and members of the ESCO, please. Thank you. The Secretary for CMSA, Simisola Isami, to give us a vote of thanks, and thereafter we would have lunch. Thank you.
Thank you very much, Mabel. On behalf of the Executive Committee of the Capital Markets of the Solicitors Association, the Planning Committee, the 2020 Annual Business Luncheon, I would like to thank everyone here present for the patience and taking the time out to be a part of this. First of all, I would like to thank our keynote speaker. Unfortunately, he had other engagements and had to leave, but we do appreciate him making the time out of his busy schedule to be a part of this today. He was very, very kind to set the tone and introduce the theme as well as the discussions that followed it in his keynote address. We also want to thank our fireside chat speakers, Ms. Olanio, as well as Mr. Aladekomo, for that very practical and robust discussion about the initiatives and opportunities that are available in the capital market. We also want to thank our panelists as well for the very, very engaging discussion. The success of today's event, however, cannot be told without reference to our Board of Trustees, particularly the former chairman of the Board of Trustees, Chief Udujumi. Thank you very much, sir, for gracing us with our presence. I also need to recognize and acknowledge Mrs. Isoka, our longtime member, permit me to call you our patron, for their presence and support at all times at every and any activities of the CMSA. I would also want to recognize the former chairs present in our midst today, Mrs. Owoigbe and Mr. Ben Obidigwe. It's also important to note that we have some former past members of the Executive Committee of the CMSA here present. Okay, Mrs. Shembore, I think she just left, because she's still outside. Okay, Mrs. Shembore, thank you for making that time out to be with us today. As well as Bukiola B, she's also a member of the Planning Committee for this year's event. Thank you very much for your support. I also need to mention Otome, I think she just left as well, and other past Executive Committee members that are present here with us. It's also important to recognize the presence of partners of senior members of member firms that are here with us today. It's also important to note that we had several sponsors at this year's event. I think we had last count 21, which has been quite impressive despite the recent times and the economy that we're in. Permit me to just quickly acknowledge all our sponsors at this year's event. We have headline sponsors by Babalaki and Co. We had as airline sponsor Duale Ovia Alex Adedipe, as well as Templars. Our platinum sponsors for this year are Alukwanoye Bode, Bloomfield, Danwa Nigodalo, Pentagon Partners, Wigwe and Partners, Udo Doma and Bello Sage. We also had gold sponsors by the Law Crest LLP, Alliance Law Firm, Odujiri and Adefolu, Punuka Attorneys, Berkeley Legal, the NASD, PLC, Pathden Partners, Great Chapel Legal, Olaniwa Ajayi, AO2 Law, as well as Simon Cooper's. In addition to that, we also have Doma Long Engineering Limited, who were gracious enough to sponsor this year's event as well. I want to thank you all for making out time and for sticking with us despite the late start. It's good to know that we still have a room that is very full. Nobody left. Thank you all for making time out. Lunch has been served, but please permit, our members should please permit us to have our speakers and panelists go out first.
Very much. Actually, would allow chairman on that table with our board of trustees, our formal chairman board of trustees go first, then afterwards our speakers will go. Then the ushers will direct the table in orders in which it should go.
Thank you all for your time.
Bon appetit.
Let me use the chairman's prerogative to reorder that. We're starting with the table with our panelists and speakers, followed by the table with the former chairman of the board of trustees, and then the rest of our members and guests. And thank you so much for coming and staying so long today. Thank you.
Fathers, four founders of Group Foreplay, Mr. Bob James. Four fathers.